This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is Tuesday. I'm going to call it Tech Tuesday, March 9th, 2021, because check it out.
I think we were talking about a tech sell-off yesterday.
Your brows are furrowed.
Yeah, what is going on here?
Because it isn't a tech sell-off today. It's a tech rally in a big way.
It really is. The NASDAQ up more than 4% right now.
Yeah, listen, and we've got Bitcoin back toward a record. Treasuries are up. Spring is definitely in the air. If you've walked around New York City, it's feeling kind of nice.
Yeah, it's nice and sunny out there today.
Oh, fingers crossed. All right, we've got a lot to cover over the next 3 hours. Let's get you going, though, on this Tech Tuesday with a check on that trading day. Hey, Charlie Bell.
Well, hello there. Happy Tuesday to both. Indeed, great day in New York. Let us begin with what's going on with Bitcoin. You talked about that, up now by 3.8%. 53,884 right now on Bitcoin among some of the tech names today. Facebook shares, they're up by 5%. Apple surging 4.5%. Amazon up now also by 4.4%. Netflix up 3.5%. And Alphabet, parent of Google, up now by 2.2%. Bottom line here, yes, we'll be talking a lot about this today. Investors pouring back into the market's riskiest assets as dip buyers power the NASDAQ 100 to its biggest rally since November. NASDAQ 100 index up now by 4.5%. To put that in context, NASDAQ, the composite index, up 4.2%, up by 529 points. S&P up 81, up 2.1%. The Dow up 274, up by 0.9%. In the year-to-date column on NASDAQ, up now by 1.9%. 10-year up 14.30 seconds, 10-year yield 1.54%. Gold up 2%, 17.16 the ounce. And a retreat for West Texas Intermediate crude down 1.6%, 64 even a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is time now for the Market Drivers Report. Let's get to it. With us is Dave Wilson, stocks editor at Bloomberg News, on the remote access in New Jersey. Joe Weisenthal with us, markets editor at Bloomberg News, co-host of What'd You Miss, coming your way a little bit later on Bloomberg TV. He's on the phone in our New York City bureau. Dave, kick it off with us because we've got a tech rally underway.
We sure do, and we can talk about a big tech rally, not just because of the size of the moves in like the S&P 500, but in the companies that are leading the advance. I mean, Tesla, which sort of fits under the big tech heading, really stands out. You know, the shares are up more than 19%, by far the biggest gain in the S&P 500. And you look across the rest of the group, I mean, a pretty solid advance, whether we're talking Apple or Microsoft, Amazon, Google's owner, Alphabet, you name it. But it's like we got the 10% drop from last month's high, the NASDAQ composite. And it's like people decided, well, now it's time to buy. You know, so that buy the tip mentality, you know, really kicking in a big way here. I mean, that's what it looks like as much as anything.
All right, Joe Weisenthal, come on in on this because I read your column this morning, and it's like, okay, so we're going to blame the Fed here, right? Because of all of this easy money policy, or maybe we shouldn't.
Yeah, I mean, I think, look, there is this view that's like, okay, there was all this Fed easy money and it went into all this speculative assets. I think you could make the argument that it's the exact opposite, that essentially tightness both from the Fed and Congress created a premium for the last decade, really, for growth assets. Because if you can't get good returns in the general economy, you can't get good returns in banks, you can't get good returns in energy, then you're just going to have to go where the growth is. But if you actually see the Fed start to loosen up and be willing to tolerate more growth and the Congress spend, suddenly tech's growth premium comes down, and I think that's what we're seeing in the market. We're seeing the Fed easy, we're seeing the Congress spend, and suddenly, today notwithstanding, today's a bit of reversal, we really have seen tech underperform quite a bit in this environment.
But you say in your column, and I love this, I had to read it a couple of times, I'm not as smart as you, but you say what's clearer now is that this boom in tech, which has lasted longer than a decade, has been fueled by tight money rather than loose money. I don't get that.
So it's basically this idea that if, you know, we always say, oh, money's been so loose, right? Money has been so cheap. Had it been as cheap as everyone says, then we would have had more rapid growth. We would have had more rapid inflation. If, like, we really had all this plentiful capital sloshing around, we would have had a boom. In fact, we didn't really have a boom. We had a pretty narrow, mediocre GDP and not much inflation and suboptimal employment. And so in that environment, if you're looking around and it's like, yeah, GDP is weak and all this stuff, where do you put the money that you do have? Well, you put it into the one thing that is actually still growing fast. And of course, that's your software and electric cars and stuff like that.
Where there's actually growth.
Where there's actually growth. But because those, you think about a Tesla, for example. Tesla, their fortunes will be the same if the economy grows 3% or 8%, because electric cars are its own trend that isn't really affected by the economy. You take a bank, there's a big difference for, say, J.P. Morgan if the economy grows 3% or 8%. And so in an environment in which you have mediocre growth, you can go to the companies that have a lot of their own growth. But in a robust economy, you could put capital to all kinds of companies that begin to thrive. And so if we really had as loose money as everyone says, I think there would have been a lot more opportunities to invest beyond just tech, and tech wouldn't have had this monopoly, so to speak, on growth.
So, Dave, come on in here and talk a little bit more about today's trade, because what we are seeing play out here is, this idea of a rising tide lifting all ships. I mean, that's what we're seeing when it comes to tech. There's no sort of stay-at-home trade not happening today. The stay-at-home stocks are doing well. Peloton is higher. DocuSign is higher. Joe mentioned Tesla. Tesla rallying 14%, halting this 5-day slide. How are you seeing it play out in individual equities?
Well, it's like as far as today goes, it's kind of like the flip side of what we've been seeing the last few months, really. I mean, when you go through and see that energy stocks are the only group that's down among the 11 main ones in the S&P 500, and you look at what's at the forefront of the gains, and you certainly see Tesla, but you don't have to look too hard to find stocks like NVIDIA, the chip maker, and then you see PayPal, you're talking fintech, as they like to call it, financial technology, and then Twitter. I mean, all these shares, certainly fitting in with the big tech kind of theme that's been playing out here. And, what we've been seeing lately has sort of been the antithesis of that. And now, at least for one day, we're kind of back on the old track.
Yeah, exactly. Hey, Joe, final thoughts here. It does feel like, though, what we're seeing is, against the backdrop of what you said, I mean, does it all kind of fall into place for you, make sense?
Yeah, I mean, look, today is an extraordinary day. Yeah. ARK, for example, it's literally best day in history. But, it gets us back to Friday. So we have to see if this can be sustained.
All right, good stuff. Guys, thank you so much. Perfect setup for us on this Tuesday. Really appreciate it. Dave Wilson, he's our stocks editor at Bloomberg News on the remote access from New Jersey. He'll be back with his stock and chart of the day. Joe Weisenthal, markets editor at Bloomberg News. Catch him on What'd You Miss? That's coming your way at 4:30 p.m. Wall Street time on Bloomberg TV. I love his 5 things to watch every morning, 5 things that are, on their mind. And I just think we have to be smart about what's going on, because it's so easy to say, oh, everybody's running from tech. You really need to kind of understand in the big picture of what the Fed's been doing or not been doing, and kind of what's going on. Part of the labor market he pulls into this. There's a lot going on.
And he wrote that column before the markets opened.
I know. And it's just, I just think it's at a point where we really have to understand kind of fundamentally what's going on in terms of some of the big, broad macro issues, and then specific to the companies. Kathy Wood would argue that as well. Know your company, know what's going on. And that's why she is all in, even when, in many cases, people are all against something. All right, let's do the Bloomberg Business Week bite of the day. One number.
Today's number, $6 billion. Zoom CEO Eric Yuan donated more than a third of his stake in the company, filing show. Yuan gifted almost 18 million shares of the conferencing technology firm last week. The shares were valued at about $6 billion. That's based on Friday's closing price.
Yeah, exactly. And Zoom, I always screw this up, their ticker, because there's another Zoom, and it's so.
You're not the only one.
I know. Zoom that we're talking about is ZM, and that stock's up another 9% in today's session. It's just about not even 1% higher on the year.
What rotation?
Yeah, exactly. Coming up, we've got some of the most read stories on the Bloomberg, including the unfair property taxes that keep black families from gaining wealth. This is a must-read.
Yeah, it is. We're also going to be talking about Trump's next challenge, making the 74 million people who voted for him into believers, into buyers. We're talking his business empire.
Making them his consumers. We've got a bunch of tech stories for you, including the CEO of PacBio, and Tom Siebel is back. And then we're going to talk a little bit more about Tesla, its foray into batteries in Texas, that exclusive that we touched upon yesterday.
All right, let's get a check of world and national news. Hey.
Hey, Tim, how are you? Buckingham Palace is responding to the Oprah Winfrey interview of Prince Harry and Meghan Markle that aired in the UK last night. The palace says it is saddened to learn of the struggles that Harry and Meghan revealed, and they would be taken very seriously and addressed privately. UK Justice Secretary Robert Buckland chose his words carefully when asked about the allegations of racism and the lack of empathy from the royals.
Every family, place of work will have their own way of dealing with matters like this. I accept they're sensitive matters, but I don't think it's right of me to comment about them.
Prince Charles did not speak about the interview today when he visited a vaccine clinic in London. The House is set to vote on the revised stimulus plan probably tomorrow. Lawmakers will be considering changes that were made in the Senate before taking that vote. A new AP Nork Center poll indicates roughly 4 in 10 Americans say they are still feeling the financial impact of the loss of a job or income within their household as the economic recovery remains uneven a year into the pandemic. Pentagon officials are said to be crafting a fiscal 2022 budget plan that assumes the military will receive $704 billion to $708 billion. That's essentially a flat budget instead of the increase that was anticipated under former President Trump. That's according to 3 current or former defense officials. The previous administration had announced it would propose about $722 billion in the year that begins October 1st, although lawmakers of both parties have predicted less would be available. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries, I'm Nancy Lyons.
All right, Nance, thank you so much. So I'm going to say, Tim, that J&J vaccine, one vaccine, don't need the extreme cold temperatures. It really does feel like that is a game changer when it comes to getting the vaccine out.
It really does. I mean, if we think about what the CDC said yesterday about the changes in guidelines for people who are fully vaccinated, think about their definition for fully vaccinated. When it comes to the mRNA vaccines, the 2-shot vaccines from Pfizer and Moderna, that 2-dose vaccine is given over either 3 weeks or 4 weeks. Then 2 weeks after that is when you are considered fully vaccinated.
So it's a long process.
It is a long process. That 1-shot vaccine, it decreases that period of time.
Well, and what's happening is you're finding a lot of states and governors across the country of those states shifting their priorities on who should join the vaccination line as supply has increased, and specifically that J&J shot, was added to the state's arsenals. You had the governor of New York, Andrew Cuomo, said he's going to personally make an appointment to take the vaccine now that his age group will be eligible because today he said he would lower the age for COVID-19 vaccine eligibility to 60 years old from 65 on March 10th. I'm just still waiting for it to go a little bit lower.
you and me both, my friend, and a lot more people as well.
Yeah.
It's not just the age difference here in New York that was changed. Essential in-person workers from government agencies and nonprofits will also be able to get the shots. That starts in just about a week on March 17th. These public-facing building service workers are also going to be eligible.
Yeah, and listen, over in New Jersey, my home state, Governor Phil Murphy opening up eligibility to teachers. So, I mean, listen, and I guess he was saying he was asked at a March 1st virus briefing about which groups had lobbied to be added, and he said literally everybody. It's like, okay, show of hands, who wants the vaccine? Boom, they all go up.
But look, it's playing out at different rates in different states.
True.
Connecticut, for example, has dropped the age lower than 60, 55, I believe, at the beginning of this month. States like Florida are still keeping it higher. Of course, there are a lot of people who are elderly and retirees in Florida, so perhaps it makes sense.
Yeah.
But it's different states taking different approaches.
Yeah, totally. Right now, globally, more than 312 million COVID shots have been given around the world. Wow. This is Bloomberg Business Week on Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. An update for the Dow, the S&P, and NASDAQ as investors pour back into the market's riskiest assets. Dip buyers powering the NASDAQ 100 index to its biggest rally since November. Bitcoin back toward a record. Right now we've got the 10-year at 1.53%. S&P's up 77, up 2%. Dow Industrials up 258, up by 0.8%. NASDAQ surging 507 points, up by 4%. NASDAQ 100 index up 4.3%. Russell 2000 up now by 2.5%. So a big day for technology. Stay-at-home winners surging after being left for dead as vaccinations pick up and Democrats move to inject $1.9 trillion into the economy. Tesla shares surging right now by 18%. After earnings, Stitch Fix plunging 28.8%. Gold up 2%, $17.17 the ounce. West Texas Intermediate crude down 1.7%, $63.93 a barrel. Again, recapping stock surge, tech rallies, S&P up by 2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Gotcha. Thank you so much, Charlie. So, Tim, a little bit of our COVID backdrop. We talked a little bit about what's going on in New York City and New York State, but we did see the vaccine from Pfizer and BioNTech showing a high ability in lab experiments to neutralize some of those virus strains first detected in Brazil, the UK, and South Africa. You've got U.S. Airlines are urging the Biden administration to develop virus passports. We have seen infection spread at the slowest pace since the pandemic began, but we are seeing global cases pick up some speed.
Yeah, we're seeing a lot of good news and a little bit of concerning news.
Yeah, that's, I think, a smart way to put it. And one company that's been involved in helping others really work to find some solutions is our next guest.
Yeah, Christian Henry is Chief Executive Officer of Pacific Biosciences, joining us on the phone from Maine this afternoon. Christian, thanks so much for joining us today. How are you doing?
I'm doing quite well. Thank you for the opportunity.
So talk a little bit about how you are thinking about variants right now, because when we talk to these medical experts, these healthcare professionals, these doctors, we hear the same thing over and over again. The United States is not good at genetic sequencing when it comes to the virus. We just don't do it enough.
Well, I think that we definitely, as a percentage of the population that we test, we do it less than other countries, such as the United Kingdom, where they may actually be out in the lead. But I do think there's a lot of excitement around testing and surveillance as a whole, and you're seeing the Biden administration get more engaged in this area, and we're part of that process. And so I think we're picking up steam, but you're right. We have been behind other countries.
Well, tell us a little bit about the work that you guys are doing specifically, because you are involved in helping other companies find solutions and really a better understanding of the coronavirus, which, as much as we've learned, there's still a lot to be known when it comes to COVID-19. So tell us specifically about the work that you guys have been doing at PacBio.
Yeah, so PacBio, we developed this DNA sequencing technology. So it's the actual technology that allows scientists and others to look at the coronavirus strains and basically decode the genetics behind the virus. And we are, advancing the state of the art with that with our technology. And we have partners such as LabCorp, which is a major testing organization, testing thousands of samples per week.
We're all familiar with LabCorp.
At this point, we are.
Yeah, I'm sure you are, yes. But they're testing thousands of samples each week using our technology to uncover the various variants, and then we pass that on to the CDC and others.
When you say thousands a week, in order for us all to sleep well at night, what would you like to see? How, in terms of numbers, how should we be testing every positive case that comes in?
Well, I think that in an ideal world, we would have the opportunity to test every positive case, but that's probably not practical. Realistically, if we can be testing, say, 25 to 50% of the cases that are occurring, and we have the testing locally, so locally around the country, I think that would give us much better routine visibility into the virus, how it's changing, and really give us the early warning signs required to, basically put protocols in place to try to stop the spread.
How much does it cost to do this genetic sequencing?
Well, it really depends on the scale you're operating at, but the sequencing cost itself can be as little as a couple of dollars a sample. So it's really not that expensive on the sequencing itself. Of course, there's all of the infrastructure around that which can make it more expensive, and that's dependent on the scale of the laboratories. But a company like LabCorp can do it very inexpensively at very high volume.
Christian, explain to me and really our listeners and our audience in terms of why sequencing, and you guys do long read sequencing, why all of this is so important in understanding variants or getting ahead of variants and ultimately getting control of this pandemic or future pandemics for that matter.
Yeah, well, I think what's so important is when you know the actual structure of the DNA sequence at every single base position, you can understand what's changing and how that affects how the virus infects you, how that affects how the virus gets transmitted from person to person. And so you can understand those variants in a much deeper sort of way than with any other technology. And that's why sequencing is so important. Our version of sequencing is called long-read sequencing. And all that is the ability to look at very long pieces of the DNA and through that get a much deeper view or a more accurate and complete view than other DNA sequencing technologies.
Right.
Yeah.
And go ahead.
Go ahead.
I was going to say the devil's in the details, right? I mean, this is Christian. We've only got about 30 seconds, but as specific and as detailed as you can get, it's going to be crucial.
It's absolutely essential. We need to be able to track these viruses, and it's not just coronavirus. It's the future, thinking about preventing the next pandemic. So pan-viral sequencing is going to be extremely important, and you're going to see it rise into the national public health consciousness, not just in the United States, but around the world. And I think this is where global assistance and collaboration is going to be so important.
Yeah, this is why
for the entire world.
Yeah, hang on for a second. We're going to come back. It's why people say we're going to go back to where we were. We're never going to go back because we have all been impacted on so many different levels because of the virus. Christian Henry, we're going to get back to him. He's CEO at PacBio with us on the phone in Maine. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, you're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. We're going to get back to Christian Henry. He's CEO of Pacific Biosciences. This is a stock and company that's been on a tear.
Yeah, it really has. What's it like to take the helm of a company in the midst of a pandemic?
That's
Becoming
what he did.
CEO in September. Yeah, that's exactly what he did.
We'll start there. That's a great point. Let's get back to your top business stories. Another check on that trading day. Here is Charlie
Hi,
Pellet.
thank you very much. You mentioned that stock being on a tear. Looking at it now, PACB on the ticker up by 14.8%. We've got the Dow, the S&P, NASDAQ all surging today. S&P up 77 right now, higher by 2%. I'll give you the why in just a moment here. The Dow up 251, up 0.8%. The real action, Techland, NASDAQ surging 497 points, up by 4% right now. Back in the green year to date. NASDAQ 100 index up now by 4.3%. 10-year yield 1.54%. Gold up 2%, 17.16 the ounce. West Texas Intermediate crude down 1.4%, 64.13 a barrel. Investors pouring back into the market's riskiest assets today. Dip buyers sending NASDAQ 100 index to its biggest rally since November. Bitcoin, by the way, heading back toward a record, a 4% gain today for Bitcoin, 53,995. So it is an up day across the board. Crude, though, slumping. West Texas Intermediate crude down 1.4%, 64.13 a barrel. Gold up 2%, 17.16 the ounce. The vaccine from Pfizer and BioNTech has shown a high ability in lab experiments to neutralize coronavirus strains first detected in Brazil, the UK, and South Africa. Now, what about life once you have had the second dose? Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security. And on Bloomberg Radio and Television this morning, he told us yesterday's announcement from the CDC about vaccinated people being able to visit indoors is very welcome news.
At least it shows people what the future holds. And it's important to remember that this CDC guidance is a first iteration. It is something that will evolve as more data becomes available and as the CDC gets more comfortable. So expect this to be revised and more guidance change for those who are vaccinated. And it really shows you why vaccination is important, why it will change your life and give you your life back.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer up by 0.6%, BioNTech surging now by 6.3%, AstraZeneca up 2%, Moderna's up by 4.7%, Johnson & Johnson up by 0.9%. Recapping, S&P moving higher, S&P up 76, up by 2%, NASDAQ Composite Index up now by 3.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. I want to go back to Christian Henry, CEO of Pacific Biosciences, joining us on the phone from Maine. Christian, you heard us talking about it when we were talking about what we wanted to talk to you all about. September of 2020, here we are in the middle of a pandemic. You take over as CEO. You had been a board member and you had been chair. But what was it like to take the helm of the company in the middle of a pandemic?
Yeah, it was actually really challenging in the sense that you can't, one of the hallmarks of a great CEO is someone that can build a culture and share a vision, and creating that culture through Zoom is really tricky. And so we've had to navigate very carefully. We've been able to do some great recruiting to build a new team. And actually, the pandemic's made that easier, to be honest, because the desire, the ability to work from anywhere is becoming more apparent. So in some ways, it's been very challenging. In other ways, it's been very helpful.
Yeah, that's interesting. Well, do you anticipate that working from home component trend is no longer a trend? It's just kind of the way we're going to do it going forward, or at least a hybrid approach, Christian?
Yes, I do. I think we're going to have a hybrid approach. I do think there's huge benefits to having places where employees can congregate, create culture, collaborate, and I think we'll continue to operate in that sort of way. But the notion of everyone has to be in the office every single day to be effective or to be efficient in their job, that notion is completely gone, as we've been very effective during this pandemic.
So when you took over as CEO, in the process, you raised $85 million with an additional public offering. That was back in November. SoftBank bought 6% of the company in January and then invested $900 million in it in February. What are you doing with all that cash?
Well, we're using it to expand our business in every dimension. You know, one of the reasons why I decided to take this role is we have incredible technology, and the opportunity to exploit that technology or bring it to market for a broader customer set is right in front of us. And so we're investing heavily in globalization of our company, development of our commercial footprint, and then accelerating the core technology itself. So we're investing heavily in new products to create a broader portfolio to really serve in these DNA sequencing markets, which are growing and great opportunities.
Well, talk to us about the opportunities and what that kind of growth rates what are the growth rates you anticipate, Christian, when it comes to revenues, when it comes to earnings? Because, I mean, your stock's been on a tear. It was up more than 400% last year. It's up another 21%. This year, it's up 15% just in today's trade. I mean, and I will say there's a whole biotech trade going on today with the rally. You know, what is it that you can tell us about growth that justifies, right now, a valuation, a PE of 350?
Well, I think that the one thing you can see is our technology is highly useful in an emerging area of clinical whole genome sequencing, and that's really the ability to look at the whole human genome at one time and to use it to help inform doctors of diagnosis of rare and undiagnosed diseases, in oncology applications, in neurobiology, where very complicated diseases like Alzheimer's and things like that. The whole genome sequencing market is just at its very infancy, and our technology, we've demonstrated, is superior to any other technology out there to really try to unlock the mysteries of the human genome in a clinical context. And so that's a huge growth opportunity for us. You know, if you think about it, every baby born perhaps one day could be sequenced, and that's a big market opportunity.
Do you continue to do it alone? Just got about 25 seconds.
We will continue to keep growing and look for opportunities to partner with people. We did a great collaboration with a company called Invitae, and I think at the end of the day, we're looking at building out an ecosystem with our long-read sequencing right at the center of it.
All right, going to leave it on that note. I'm looking at a story on the Bloomberg or on Google, DNA sequencing market to reach maybe like over 11 billion by 2027. Wow. So it's definitely growing. Hey, Christian, great to check in with you. Keep us posted on what you're up to. Christian Henry, CEO of PacBio, joining us on the phone from Maine.
Let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nancy.
Hey, Tim. Jury selection is underway in the trial of Derek Chauvin, the man charged with second-degree murder in the death of George Floyd. Judge Peter Cahill urged those in the potential jury pool they will need to avoid media reports in the case.
Because of the nature of the charges, this case will receive media coverage. Do not read about this case in the newspapers or online, and do not listen to news about it on radio or television.
The judge is not stopping proceedings, even though a third-degree murder charge is under review by an appeals court. Floyd was declared dead after Chauvin, who is white, pressed his knee against the black man's neck for 9 minutes. Another of President Biden's nominees, Vanita Gupta, is facing potential Senate opposition because of harsh comments about Republican legislators and judicial nominees that she made on Twitter as the president of the Leadership Conference on Civil and Human Rights. Bloomberg's Irv Chapman has more from Washington.
Gupta, who headed the Civil Rights Division in the Obama administration, would return to the Justice Department as Associate Attorney General.
On the tweets, I regret the harsh rhetoric. I wish I could take it back. I can't. But what I ask that you do is look at my lifelong record, because I believe in the importance of building consensus to get things done.
Gupta won the support of police organizations with which she worked on criminal justice reform bills that were enacted into law. In Washington, Irv Chapman, Bloomberg Radio.
Portraits of former Presidents George W. Bush and Bill Clinton have returned to the grand foyer of the White House. The two portraits were moved during President Trump's tenure to an old dining room. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Looking for a luxury condo?
Yes and no. I'm not actively looking, but I would happily accept one.
I know. I'll take it.
I'll take it. If you're going to twist my arm, Carol, I'll do it.
Done. Well, there's a great story by Ashra Carmiel on the Bloomberg, and she says Manhattan's glut of luxury condos. It's been nearly a decade in the making. We've done a lot of stories about the overbuilding of luxury condos, but this, she said, could be the year the logjam starts to break.
Professional deal seekers are amassing investment funds ready to pounce at the chance to purchase unsold apartments in bulk. Developers with towers that started sales years ago are finally dropping unit prices to levels that ordinary buyers are willing to pay.
So listen, there's a lot of stuff going on. They're saying lenders are getting more aggressive. They're moving in to foreclose on long lingering projects where the builders have fallen into delinquency, and then those actions could potentially spill more deeply discounted homes onto the market. You add it all up, you're looking at maybe more than 15,000 unsold units across 900 projects, largely in Manhattan, with a total listed value of $45 billion.
It is a massive number of apartments.
Yeah.
But look, it's all about how much patience these developers have and how much patience the banks financing the projects actually have.
Yeah.
Because if they're sitting there unsold, it's because people aren't willing to pay.
Exactly.
How much are they willing to drop the prices in order to move those unsold units?
And what's the point where, you're starting to lose money, right? Like, these development projects are huge. They're long in the making, right? It's not like, okay, I want to build a building and it's up in, 3 months. That's not how it works.
These have been years in the making, and a lot of these couldn't have come online at a worse time.
Yeah, listen, it's a really, you've got this big macro trend that we have yet to see what the long-term consequences of. I mean, we see it just in terms of retail. There's a lot of empty spots. In 6 months, will a lot of those empty spots be, filled with retail and restaurants? I don't know.
And from a price perspective, looking back on this in a couple of years, what will have been the bottom? When was the perfect time to buy? We're not going to know that for a while.
And maybe, do we look back and say it was an incredible buying opportunity? It was a major city. We knew it was going to come back, but we just don't know.
Or does it get worse for in the next couple of years? We don't know.
Exactly. All right, you're listening to Bloomberg Business Week. We're going to talk a little bit more about real estate and taxes. That's coming up.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're holding close to session highs. The Dow, the S&P, NASDAQ all rallying today. Investors pouring back into the market's riskiest assets. Dip buyers powering the NASDAQ 100 to its biggest rally since November. Right now, that index is up 4.5%. By comparison, the NASDAQ Composite Index up 4.1%. NASDAQ up 520 points right now. The S&P, by comparison, up 77. That is a gain of 2%. The Dow up 241, up 0.8%. Dow Transports up 1.4%. And today we're looking at the Philadelphia Stock Exchange's SOX Index. Semiconductors up by 6.5%. 10-year yield 1.54%. We've got gold up 2%, 17.17 the ounce. And West Texas Intermediate crude retreating by 1.6%, 64.01 a barrel. Again, recapping, technology leading the way higher today with the S&P up now by 2%, NASDAQ up 4.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, appreciate it, Charlie. Well, this week, Bloomberg Business Week featuring a deep dive into equality. It's all part of our enhanced equality vertical here at Bloomberg and at Bloomberg News. And this story will be in the issue. It's out later this week and now on the Bloomberg and at Bloomberg.com. It's about the unfair property taxes that keeps Black families from gaining wealth. Here's more from Bloomberg's Renita Young.
I feel like there is no safe place for me to have this conversation because I'm going to get judged one way or another.
That's Delisha Scott from Detroit. She was overtaxed on what was once her home. She became a proud homeowner in 2005, a dream because she always wanted stable housing for her kids, something she's never known. But when Scott lost her job during the Great Recession, she fell 3 years behind on her property tax payments. And those payments she owed were much higher than she should have been paying. Then Wayne County took her home away and auctioned it off for less than 10% of what she paid for it.
I feel betrayed too. Last year to learn that I was overtaxed by $5,000. It makes me sad. It makes me depressed. It makes me feel like a failure.
For years, the city of Detroit used inflated valuations of Scott's house to calculate her property tax bills. She now rents that same home for 27% more than she once paid for the mortgage.
You know, it's not just a rental property. This is my home, right? I raised my children in this space.
Scott is not alone, and her story is not unique. Her home was among tens of thousands in Detroit's lower-income Black neighborhoods that the city's assessors routinely overvalued. And this happens all across the country, where nationwide data show local officials have also systematically undervalued homes in affluent areas, reducing the taxes those homeowners paid. Bambi Hayes Brown leads the nonprofit organization Georgia Advancing Communities Together, which focuses on affordable housing and community development. She says the entire real estate system has a role to play in equitable housing, and it all starts with training.
Not just your training to get your license and your training for renewal, but to also go deeper into ethics, trainings that look at internal racial biases and how to overcome them.
In many cases, real estate investors profit off of unfair tax burdens. But for the people who they weigh on, like Delisha Scott, it leads to a vicious cycle of unpaid bills and property seizures, and ultimately destroys the best chance for families to build generational wealth. For more on this story, subscribe to the Paycheck podcast from Bloomberg with a new season focusing on the racial wealth gap. You can find Paycheck on Apple, Spotify, or wherever you get your podcasts. I'm Renita Young, Bloomberg Radio.
All right, and the crux, the basic story, that is one of the most read on the Bloomberg today. Here with his story is Bloomberg News Projects and Investigations reporter Jason Grotto on the phone in Chicago, along with Bloomberg Business Week editor Joel Weber on the Access line in Brooklyn. I have to say, Joel, Tim and I have been talking about this story so much. It's just so unfair.
Yeah, and I think the unfairness is the thing that really stings about this one. And, everybody hates property taxes to begin with, but then to have unfair qualities kind of layered on top of it, I think is a thing that can definitely provoke some outrage. And it is one of these things that's sort of hidden in plain sight, but it does affect people of color, especially Black communities, disproportionately. So Jason, help us. You've been through so much data on this one. Help us break down what you found.
Well, first of all, thanks so much for having me, everybody. Yeah. The thrust of this story is actually based on a massive study out of the University of Chicago, Harris School of Public Policy. A professor there, Chris Berry, analyzed 26 million property tax records over a 10-year period, and all over the country, the analysis found the same pattern, and that is lower-priced homes being overassessed and higher-priced ones being underassessed relative to the market value of those homes. And of course, all property taxes are based off of these valuations. So it's sort of bad data in, bad data out. And the result is it just skews the entire property tax and places a much greater burden on those who can least afford it. Makes it regressive.
So tell us the story of Delisha here.
So, Delisha is someone who, I've been talking with for many, many months. Obviously, it took a lot of bravery for her to come out and actually talk and put her story out there. There's a lot of shame that goes on here. But essentially, she bought a home back in 2005 after working at a corporate cafeteria. She doubled her income when she got a job at a domestic violence shelter and was able to qualify for a mortgage. And things were going along fine until the Great Recession when she lost her job. And it took her a couple of years to get a job back, and she missed a tax payment. And once you fall behind on property taxes, it's really difficult, to get back, caught up with those because there's so many fees and fines that get ladled on. And so she just couldn't catch up. The Wayne County, the county, for Detroit, foreclosed on the home and then auctioned it off, as your story mentioned. And since then, it's been sold 2 more times while she's been renting the home. So the last sale was for $84,000, far more than she paid originally. And, part of the reason why the value has gone up because her rents have gone up because now, it's an income producing property and the cash that it throws off every month is keeping the value high.
Well, there's a whole investment angle into that, and I wish we had more time. But one thing I do want to get to is this whole idea between, tax assessment being overvalued and private appraisal sales being undervalued. And as you say, Christopher Berry's research, it's not just Detroit. You talk about an example in Brooklyn.
Oh, yeah, it's all over the place. We spoke with a woman, Carmen Daniels, in East New York, who, the really hard thing here is Ms. Daniels, her property, a single-family home, she felt like the valuation that the New York City Department of Finance put on it was pretty good. She thought it was pretty fair. Mm-hmm. But then she learns that, 3 miles away in Clinton Hill, there's a condo that someone bought for $3 million. And the tax, it's taxed as if it were worth only $1.2 million. So even though that home, the market value, is 8 times greater than hers, the actual tax bill is only $1,000 more for that higher price property. So once again, the burden of it is, tilted unfairly. There's something called the effective tax rate, which I'm sure everyone knows about. That's what gets skewed because of these valuations.
I have to ask you to be quick, 15 seconds. Detroit doing anything about this? Just very quickly.
Well, there's a press conference tomorrow. So far, we haven't heard anything from the city, so it's kind of up in the air.
All right, listen, we're going to be following this story, and we are counting on you to update us on it because it's an important one. Jason, thank you so much. Jason Grotto, Projects and Investigations reporter at Bloomberg News. With us from Chicago, Jill Weber, editor of Bloomberg Business Week on the remote access from Brooklyn. This story, it is going to be in the current issue of Bloomberg Business Week magazine. It's already online and on the Bloomberg. This is Bloomberg Radio.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks hold on to gains as we move into the final hour of trading on this Tuesday, March 9th. Right now, the Dow, the S&P, NASDAQ all rallying as investors pour back into the market's riskiest assets. Dip buyers powering the NASDAQ 100 to its biggest rally since November. Right now, that index up by 4.4%. By comparison, the NASDAQ Composite Index up right now by 4%, back in the green for the year. S&P is up 2% now, higher by 73 points. Dow Industrials up 198, up by 0.6%. We've got the 10-year yield at 1.54%, up 14 seconds. Gold is rallying 2% today, up $34 at $17.17 the ounce. And West Texas Intermediate crude down 1.5%, $64.05 a barrel. Among some of the companies reporting after the closing bell today, H&R Block. The OECD is raising its global growth forecast as evidence of vaccine efficacy grows and governments add extra demand stimulus. The Paris-based organization has raised its world growth forecast for 2021 to 5.6% from 4.2%. It also more than doubled its prediction for the U.S. to 6.5%. Dr. Laurence Boone is the OECD's chief economist, and she says around the world, the virus means the deciding factor between which countries are seeing an improvement in their outlooks.
Countries manage a little better the pandemic. Some of them are even vaccinating. They can reopen their economy. And yes, the one thing which has changed compared with December is the 1.9 trillion U.S. stimulus on top of the 900 billion in December. We think that will lift global GDP growth by about a full percentage point.
And again, recapping, equities are moving higher with the S&P up now by 73, a gain of 1.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so this half hour, we've got two smart political stories. Let's get to the first one. It's from Bloomberg Business Week national correspondent Josh Green. He writes about President Biden's administration, specifically on his picks at the Department of Justice and the antitrust chief. You talked to Josh about this, didn't you?
Yeah, we talked to him on Quick Take earlier today. This is a big story.
Yeah.
And kind of a perfect time for Josh to publish this Business Week story.
Yeah, absolutely. I mean, we've been looking at this. Let's get into it with Josh Green. He's also the author of Devil's Bargain, Steve Bannon, Donald Trump, and the Nationalist Uprising. We might talk to him a little bit about that in just a moment, too. He's with us on the phone in Washington, D.C. So, Josh, listen, we've been watching Joe Biden roll out his team, his antitrust pick. This is going to be a big one.
Yeah, it is. And we've gotten, early indication this morning when the news broke that he's planning to appoint Lena Khan to the Federal Trade Commission that he's open to this band of reformers who's been pushing to change antitrust law over the last 3 or 4 years. But I think the two big jobs that remain to be filled that will tell us a lot about what Biden really intends to do as far as big tech and antitrust are the antitrust chief at the Department of Justice and the chairman of the FTC, which are two big jobs that he has yet to fulfill. So I think that's what everybody's going to have their eyes on now going forward.
Who are some potential candidates for those?
Well, two of the ones I mentioned for the DOJ job are Renata Hess, who was actually had the job at the end of the Obama administration. She was the acting chief, but she is somebody who's worked for a lot of the big tech companies like Amazon and Google, and there's really been a push from progressives against appointing someone like that. The other kind of candidate that I mentioned is a tech lawyer named Jonathan Cantor, who's the favorite of a lot of progressives. He has worked for companies like Yelp that have sued a lot of the big tech giants. And the thinking is that if Biden were to appoint him, that would send a clear signal that the government was planning to continue the Trump administration's aggressive moves against breaking up big tech power.
Okay, so I'm glad you brought that up because this is something that we talked a lot about on Quick Take earlier today, Josh, the political element of this. We talked how there seems to be bipartisan support for, quote unquote, reining in big tech. How do Democrats feel about big tech versus how President Trump and Republicans feel about big tech?
Well, it's an interesting question. I mean, it's clear, it has become more clear since the January 6th Capitol insurrection that Republicans' antipathy toward big tech is mainly driven by the belief that the tech companies are unfair to or censor conservative viewpoints, including knocking Donald Trump off Facebook and Twitter, and banning the kind of conspiracy theories that have become very popular among hard right Republican figures, both politicians and political actors on social media networks. Democrats, I think, by contrast, or at least the reform-minded stripe of Democrats, are more worried about things like competition, innovation, and the harms that things like misinformation do to our democracy generally. Outlets like Facebook were a big vector of misinformation that helped to drive these attacks and that seemed to be coursing our culture and polarizing our politics. And a lot of Democrats trace that to the problem of monopoly power in the tech industry. So while there is bipartisan opposition to big tech, it will be interesting to see if they agree on the same problems and if they can come together behind an antitrust chief who has yet to be named to go after these. I talked to Republican Senator Mike Lee, who said he was certainly open to getting behind a Democratic pick, but it would have to be one that spoke about the kind of issues that he's concerned about as a Republican.
Well, I do wonder too, Josh, having spoken to some of our legal folks here and reporters, whether or not we've got to change the legal definition of monopoly in order for there to be something more significant against some of the big tech companies.
I think that's a part of it. In speaking to law professors for my story, looking at the what's at stake in the antitrust chief, one of them warned me that if progressives get too far out over their skis, they'll actually go beyond what the law allows. But I think it's also worth mentioning, I sort of flick at this in peace, that, there are also efforts underway in Congress. There are senators like Amy Klobuchar, who have been looking at broadening antitrust law, strengthening the Justice Department. So this is really a multi-pronged effort. But in order to be as aggressive as some of these reformers would like, it would definitely take changes in the law.
Hey, listen, since we have you, and then in the next segment, we're going to talk a little bit about Sophie Alexander's story that's on the Bloomberg about how the Trump organization and really Donald Trump is going to look to figure out how does he hold on to those 74 million supporters that brought him, that backed him in November. How does he turn them into basically Trump consumers in terms of his business empire? What are you watching when it comes to Donald Trump and his next steps right now?
That's a great question. The first thing I'm going to be watching is how he communicates with them. He's been knocked off of social media. He's missing the platforms that were so powerful for him. But as we've seen in a lot of the political fights just since his impeachment, he still has an iron grip over the Republican Party, and he now has a presidential office that sends out tweet-like memos to reporters and the press at all hours now. So he's certainly trying to keep a hand in the fray and keep his brand intact. But there's been a lot of speculation among reporters and political types about how exactly he's going to monetize that. Is he going to start his own network? Is he going to sign a Fox News contract? Is he going to try and do something commercially to take advantage of this group? Or is he more interested in holding on to them as a political party? And in the early indications we've gotten are that he's most interested in politics. He's gone out and said that he intends to punish the Republicans who voted to impeach him. He sent a letter to the Republican National Committee sort of threatening them not to use his image and his name to raise money because some of that goes to backers. So we're still waiting to see, but it's clear that he intends to keep his hand in politics and in business in a way that ex-presidents haven't often in the past.
We can definitely count on that. All right, Josh, thank you so much. Really appreciate it. Always can count on Josh Green. Interesting aspects when it comes to our political system. Josh Green, national correspondent at Bloomberg Business Week. Check out his story. It will be featured in the upcoming issue of the magazine.
Let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. House Democrats are preparing to vote on President Biden's coronavirus relief bill tomorrow. Democratic Caucus Chair Hakeem Jeffries says relief bill tomorrow. Democratic Caucus Chair Hakeem Jeffries says it's just what the country needs.
The American Rescue Plan is transformative. It will comprehensively and compassionately meet the moment as a result of the devastating COVID-19 pandemic.
House Republican Whip Steve Scalise says the bill is more about Democrats pushing a progressive agenda.
90% of the bill that they're going to bring back on this $1.9 trillion spending bill is not focused on COVID relief. It's focused on pushing more of the far left agenda.
Recent polls indicate public support for the bill ranges between 60 and 80%. Some promising news from Pfizer about how its vaccine fares against the coronavirus variants.
While vaccine developers are working on new versions to fight the mutant strains, the two-shot Pfizer dose showed a strong ability to neutralize coronavirus strains found in Brazil, the UK, and South Africa. But those tests were done in a lab where the shot showed robust but lower effectiveness against the South African variant and roughly equivalent strength against the variants found in the UK and Brazil. The study focused on people who had their final vaccination 2 or 4 weeks before. In Washington, I'm Amy Morris, Bloomberg Radio.
Jury selection is underway in the trial of Derek Chauvin, accused of killing George Floyd by holding his knee on Floyd's neck. The selection process could take a couple of weeks. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So this story among the most read, I just saw our Mindy Masucci, she tweeted.
My boss.
Your boss. And she's like, that was fast. We're talking about Walt Disney's flagship streaming platform topping, drumroll please,
100 million users in an unprecedented growth run. I mean, unprecedented is absolutely the word
just
here.
16 months.
16
after
months.
Its launch.
Yeah, it launched in the fall of 2019, and it had these ambitious goals to reach by, the year 2023 or 2025. It blew those goals out of the water, and I got to tell you, yes, it's partly because of the pandemic, but even before the pandemic hit, it was well on its way.
Yeah. Oh, absolutely. And listen, many would argue and point out that they priced it well. It wasn't crazy expensive. I think it came with, was it Verizon?
Yeah,
had a
Verizon.
Deal. So very interesting. The rapid, takeoff that we've seen. I will say that the service, it's called Disney Plus. It did debut in the U.S. in November of 2019. Listen, timing was impeccable just ahead of the lockdown. And you know what I mean? I'm just saying that people were kind of all in on streaming services. So not a bad place to kind of make your debut and people to, who are starving for content, especially for kids.
Well, think about what was happening in the fall of 2019. Disney had already talked openly about launching this streaming service for months. And many analysts said, wow, Disney is way too late. Netflix is already available in almost every country around the world. It has a first mover advantage. And what this shows is that, as Christopher Palmieri writes, this is showing that Disney is Netflix's most formidable competitor.
I mean, it's pretty remarkable. And we were calling 2020 the year of streaming services because it was multiple big name brands rolling out streaming services. For a little comparison, Netflix, the pioneer in subscription streaming, finished 2020 with almost 204 million subscribers globally. And Disney Plus already at 100 million. And that took years for Netflix to get there.
It took years, and Netflix is right now available in a lot more places. I think the pricing is a big question. Can they do this sustainably?
It's a good point,
at a low
right?
price.
Exactly, because content, we know, is expensive. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
What a difference a day makes. From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ all rallying. NASDAQ surging. Tech stocks really flying high today. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. Stocks in rally mode today. And like you said, amid that surge in NASDAQ, Dow is currently up 208 points. S&P's gained 76, while the NASDAQ is up 534 points. The U.S. 10-year yield at 1.54%. Gold is up 34, and transports rise 169 points. Among the main 11 S&P sectors, leaders were consumer discretionary and tech. Financials and energy were in the red. And leaders to the upside in the Dow, Intel and Apple, while Caterpillar and Dow Inc. led to the downside. After earnings, Dick's Sporting fell 5%. And in other news, Disney Plus topped the 100 million global paid subscriber milestone. And Boeing spiked intraday as new orders topped cancellations. Wrapping things up, H&R Block reports after the bell. Live from the first breaking news desk, Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we did mention, Tim, that we had a couple of political stories this half hour. We talked to Josh Green just before this. Another story among our most read on the Bloomberg, it's on former President Trump's next challenge. We mentioned this to Josh. Trump's challenge is really holding on to those 74 million supporters who backed him back in November.
Yeah. Do they turn into buyers of Trump products? Do they go and vacation at Trump properties? That's a big question, and that's one that Sophie Alexander tried to answer in her latest story, along with Max Abelson. Sophie joins us now. She's Trump Organization reporter at Bloomberg News and joins us on the phone from New York City. Hey, Sophie, thanks for joining us on this. You spoke to some of the folks who did, some of those 74 million people who did vote for President Trump in 2020. What do they say about his businesses?
Yeah, so there was quite a mix, but the most of the people that we spoke to either didn't really care about Trump's businesses or said that his businesses aren't the type of things that they'd want to spend money on. You know, a lot of this is luxury hotels or golf, and then they also have a robust online store with hats, of course, and T-shirts, and they have Trump wine, too.
It's pretty remarkable if you think about the Trump that we all knew in The Apprentice and, you know, the Gilded Towers of the Trump Tower, if you've ever been in it, and you've seen his, you know, over the years, the apartment he lived in with kind of gold everywhere and over the top. And then you'd go to a Trump rally, Tim.
And it wasn't necessarily the people who, that Donald Trump portrayed himself as serving at the Trump Organization.
No, exactly. So it's interesting, Sophie. So, you know, as you said, you talk to these people. I mean, is there, I do wonder, does the business empire come tumbling down, or how does he, I don't know, what does he do next?
That's a good question, and I think a lot of people are speculating about what's next for Trump. There has been some talk of a potential media deal, some sort of subscription service or Trump TV, even a Trump app. And that seems like the kind of thing that he could ask supporters to shell out, you know, like $10 a month for. So it's not that much, and that could appeal widely. But the core of their business right now, and has been throughout history, is real estate and luxury real estate. So it'll be interesting to see if they decide to pivot to cater to supporters or if they stick with what they know.
So you and Max spoke to some of the members of the Trump family, including Eric Trump. What did he tell you guys?
Yeah, I mean, Eric said that he thinks that there's been enthusiasm at the properties, political enthusiasm. So they're expecting, you know, it won't be that hard to turn voters into customers, but it's something that they're focused on. And you can already see that on the Trump store. They're selling 45 hats, you know, Trump is president. And so that's really the first I've seen, at least, of them selling political stuff on the Trump Organization store.
Yeah, it's interesting, right? You talk about $15 pet collars, $80 faded denim jackets with Trump's name over the heart, just to give an idea of the merchandise. Again, like I tried to put together the image, certainly, of the Trump name and brand for years, forever, and then how it meshes with ultimately the people who vote for him. I mean, how crucial is it that he gets those 74 million people to become Trump consumers, Sophie, in some form or another? Or is there enough people, high-end, wealthier individuals who will continue to tap into those kind of luxury Trump properties?
Yeah, I can't really answer that question. It's still a multi-billion-dollar company. They have plenty of luxury real estate. They could sell a bunch of it and try to pivot, or they could hold out and see if their wealthier customers are willing to shell out money. But I think the issue now is that Trump, the businessman, is inherently a political figure, and how that will affect his business is what we're going to have to wait and see. Over the past 4 years, according to his financial disclosures, it hasn't helped much. But I did talk to someone who was very adamant that he would do whatever he could to support Trump, because he feels like, the cancel culture is coming after his businesses, and it's his responsibility to sort of reverse that and support the president.
What's so interesting, if we think back to just a few years ago, the Trump administration, or the Trump organization rather, when Trump was president, had this plan to roll out this less expensive line of hotels called the Scion, and they gave up on that plan a couple of years ago. Sophie, is there any indication that that could be a route to try to appeal to a larger number of people?
That is definitely a possibility. I don't know how much interest they have in doing that. They started that project, but they didn't finish it. Ultimately, they were building in one of the few blue spots of Mississippi, so that could be a reason that it failed. So I don't know if they're going to want to try that again, or try something that more people are speculating will come to fruition, like a media opportunity.
Yeah, right. That seems like one way of really tapping into the masses, although some of the people you guys talked to said, that they're not necessarily going to spend $10 a month for that network. Really interesting, and certainly another aspect of kind of what comes next for a former president of the United States, and one who is different than most in terms of his, business holdings, Tim.
And it was look, a thorn in his side maybe during the Trump administration. It maybe created headaches. I don't actually know. Nothing actually meaningful came of it, but it was a surprise that he was able to sort of hold on to such control, even though he did give it to his kids.
And they talk about a lot of aspects of his business that jumped up while he was in the White House. Sophie Alexander of Bloomberg News. She follows the Trump Organization. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
And coming up, we're going to hear from the Chevron CEO making some news, talking about in an investor presentation today, talking about a path to net zero and warning on tech and policy hurdles. So we're going to hear from him.
All that and more in just a few minutes. In the meantime, let's get a check of the latest business headlines with Charlie Pellet.
Thank you very much. And here's what's going on. Chevron shares, they're down now by 0.2%. A lot of oil stocks moving lower along with the price of crude today. West Texas Intermediate, we begin there, down 1.7%, $63.98 a barrel. Gold is up 2%, higher by $34 the ounce at $17.17. The 10-year up 14.30 seconds. 10-year yield right now 1.54%. Quite a day for the equity markets. Investors pouring back into the market's riskiest assets as dip buyers power the NASDAQ 100 to its biggest rally since November. Right now, the NASDAQ 100 index up 4.5%. NASDAQ Composite up 4.2%, S&P up 1.8%. NASDAQ, by the way, higher by 529 points, S&P up 71, the Dow up 161, up by 0.5%. A deal in the cannabis industry, Curaleaf Holdings buying closely held EMAC Life Sciences for about $285 million, giving the company entry into Europe's rapidly growing cannabis market. Curaleaf shares surging now by 13.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Cause when you're worried, your face will frown, and that will bring everybody down. So don't worry. Be happy.
I know what it's called. Don't worry, be happy.
Name that tune in 3 beats. Bobby McFerrin.
Absolutely. There you go. And why that song? Because, you know, we've seen people get really worried about how interest rates are going to affect stocks down the line, especially with the way the Treasury yields have picked up in the last couple of weeks. Well, you know, you go back and look historically the way LPL Financial did, and maybe don't worry, be happy is how you need to approach, you know, the move. Now, what they did, they looked at 13 time periods going back to the 1960s when we saw Treasury yields, specifically the 10-year note yield, rising over time, at least a percentage point and a half. And it hasn't gone up that much this time around, but it's working on it. So what they found is when they ran the numbers that more often than not, 10 out of the 13, the S&P 500 rose along with rates. And when you put all 13 periods together, the average performance was a gain of 15%. As a couple of strategists over at LPL wrote in their weekly commentary, which came out yesterday, rising rates are usually bullish for stocks. So all these people are worried about what's going to happen now that, you know, we're seeing 10-year yields go up. Maybe that worry is a bit misplaced here. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Well, there's rising rates, and then there are rising rates, to be fair. All right, Dave Wilson, thank you so much. Keep in mind some news from Chevron. They are giving an update on their financial outlook and talking about the business. Let's head on over to our Bloomberg TV team, Alex Steele, with an interview with the Chevron Chairman and CEO, Mike Wirth.
Thank you for spending time with me today. I just want to dive right in because we got a lot to cover. One of the big surprises today actually was your Permian investments and your big Permian targets. By 2025, 75% of your CapEx is going to go to the Permian versus 60% for those short-term production targets. What does that say about your longer-term horizon when it comes to production?
Well, Alex, it's good to see you, and we did have our investor day today and a chance to talk about how we're prepared to lead out of this cycle because we're in a different place than others in the industry. A focus on higher returns and our discipline is certainly paying off. And then a recognition that lower carbon is something the world expects, and we intend to be a leader there as well. On the Permian, what we actually showed is about 75% of our capital spending will go to unconventionals as we get out to 2025. and that is Permian, plus a number of other really strong unconventional plays that we're in, but they're short cycle capital commitments, so they're more flexible than our longer cycle projects, and it's all good return investment opportunity for us. So as we look to improve returns, this is a place where we can allocate capital and actually move the needle in a relatively more rapid manner than some of the long cycle things that we do.
Yeah, but like short cycle, that really is just the Permian, right? Where else could the incremental cash go?
Well, we have a good unconventional position in Argentina. We have a position in the Denver-Julesburg Basin in eastern Colorado. We're in the Duvernay in Canada. So we actually showed that over the next 5 years, we'll go from 200,000 barrels a day to 400,000 barrels a day in these other unconventional resources as well. So our Permian portfolio is great, don't get me wrong. But we have a number of other really strong unconventional positions in our portfolio as well.
So let's talk about the money spent for a second. You're throwing off so much cash at $60, $70 oil. You're modeling for 50. You could deal with 40. What do you do with that extra cash? I mean, you could maybe pay down debt. Some analysts say you could be a net debt near zero in a few years. What do you do? What's your order of priority?
Well, Alex, these higher oil prices are a relatively recent phenomenon. We're a long cycle business, so I think it's important to keep these things in perspective. We're coming out of a very, very difficult year. We've taken on some debt, although we still have the strongest balance sheet amongst our large competitors. And if we were to stay in an environment like this, we'd continue to observe the four financial priorities that we always talk about. Number one, which is to sustain and grow the dividend. We've actually grown our dividend payout for 33 consecutive years. We haven't cut our dividend since the Great Depression. We saw a number of our competitors cut dividends last year. We haven't done it for nearly 100 years and intend to grow that. Second is our organic capital investments, which we outlined in a very disciplined band. Number three would be the balance sheet. And then number four is share repurchases. We've repurchased shares in 13 out of the last 17 years. And if we had cash surplus to those first three needs, that certainly would go back to shareholders over time in the form of both dividends and share repurchases.
But like I mentioned, you're still making a ton of cash with the oil prices where they are now. You've been very strategic and very disciplined when it comes to your M&A. You pulled out of the Anadarko deal. You bought Noble. And I wonder how your thoughts on M&A change with oil prices.
Well, when you're looking at an acquisition in our industry, you're looking at the quality of the assets in the company. You're looking at the strategic fit with your portfolio. You're looking at the financials. And those financials are measured, Alex, against your long-term outlook for commodity prices. And so, what the price of oil is today or last year is not really a driver in how we look at the value of a company. We look at it versus our longer-term views. Now, the current price can influence how companies are valued, and companies that are under some pressure because of low prices, as we saw last year, there can be some opportunities for consolidation. And the deal with Noble Energy for us, it was a bottom-of-the-cycle acquisition at a low premium. We updated today our synergy targets. We doubled them from $300 million a year to $600 million a year. This is a transaction that was accretive on earnings per share, cash flow per share, and returns as we did it last year at the lower synergy number. So it only looks better today as prices have recovered and as those synergies have been updated. So as we think about M&A, it's about a company that could make or an asset that could make our company stronger, that would compete within our portfolio for capital, and certainly one that helps us continue to return cash to our shareholders.
I know you know where I'm going with this one, right? A lot has changed since you and Exxon have discussed a merger, and I just wonder, under what conditions might those conversations restart?
Well, I'm not going to comment on rumors or speculation in the media, but what I can say when I hear from investors about consolidation of any scale, they want to see financial results. They want to see strong balance sheets. They want to see financial discipline come out of a transaction. They want to see a company that can compete, and our company competes against national oil companies in Russia, in China, in Saudi Arabia that are very large entities, and so investors want to know, how can you compete against the very biggest and best in your sector? And then they want to talk about strategy for the longer term and energy transition. What are you doing? How could a combined company be a leader in moving towards a different energy future? And so those are the themes that come up in discussions with investors. Those are certainly consistent with the kinds of things that we think about whenever we're considering, these kinds of business opportunities.
One thing you did talk about, though, a lot today was that you will be and stay committed to being an oil and gas company in 10 to 20 years' time, but that the landscape might look a little bit different. So I'm curious as to what kind of alternative areas of energy may you be more willing to invest in down the road?
Well, I did respond to a question that said, will you be a different, will your core move away from oil and gas in the next decade or two? And I don't think that it will. I think the world will be using more oil and gas 20 years from now than it is today. And we intend to be one of the very best companies in this industry, and I think our shareholders deserve for us to continue to, deliver that to them. At the same time, demand for energy is growing, expectations are changing, and we would look to invest in things where we have unique capabilities, technologies, capacity to solve some of the most difficult challenges confronting us on the energy and climate issue. And so, we've announced investments in and a commitment to carbon capture and storage as an area that we think is part of the solution, and we think companies in our industry are uniquely qualified to do that where others couldn't. Hydrogen is another one. We're in the hydrogen business today. There are different ways to think about manufacturing hydrogen and using hydrogen in the future. That's something that would build off of capabilities that we have. Geothermal. We at one point were one of the world's largest geothermal producers. We've recently invested in a couple of companies that have new and novel ideas on geothermal. So it would be things that extend strengths that we have today into new ways to be part of this future energy equation.
I guess, Mike, under what circumstances would you spend more? I mean, you're looking at about $3 billion in the coming years to sort of deal with the energy transition strategy. And at what point will you be spending more of that money? And is it a chicken and an egg? Is it you have to ramp up your spend, or is there have to be the scalable opportunities?
Well, I think we need to, many of these are very young and emerging technologies and opportunities. And so we want to see them de-risked. We want to see them evolve. We want to see the economics continue to improve. I'll take you back to something you followed very closely, Alex. A decade ago, as people looked at the Permian Basin and small companies were going fast, investing big, and putting up kind of flashy promises, some investors or some people in the media would come to us and say, you're too big to do this, you're too slow to do this. And we said, no, we want to understand it, we want to de-risk it, we want to have the technical and operating plans to scale this in a way that is sustainable, meaningful, and can deliver strong performance. And that's what we've done. As you look back at that from a decade in the future, I think you would argue that the kind of slow and steady approach that we and some others have taken probably was the better approach. As we're looking at some of these new technologies, it's very similar. As you step into it, you want to incrementally build your understanding of the technology. You want to invest. You want to improve. You want to prove out operating performance and business models and customer acceptance. And as these things are developed, you're prepared to put more capital into them. So I think we'll be methodical and disciplined in that. We have to do both. We have to have higher returns and lower carbon. If we only invest in lower carbon, that won't work for the long term for our shareholders. And if we only invest in things with strong returns and don't pay attention to the environment, that's not sustainable either. So it really is an and world as we look at this.
Hey, Mike, it's really good to catch up with you. We have to leave it there. I'd love to keep following the progress. It's been a while. Mike Wirth, Chevron CEO, thank you very much. Caroline, back to you.
All right, and that was Alex Steele over on Bloomberg TV, catching up with the Chevron chairman and CEO Mike Wirth. And a couple of headlines. We want to see renewable technologies de-risk. That was the Chevron CEO. And also saying a world will be, he sees a world going forward where we're going to use more oil and gas in 10 or 20 years.
Also saying we have to have higher returns and lower carbon.
All right, great stuff. And if you want to see that full interview again, or if you missed any of it, just check it out at Bloomberg.com. Let's get a check, though, right now of world and national news. Over to Nancy Lyons we go in D.C. D.C. Hey, Nance.
Hey, Carol. The White House is looking forward to final House passage of the sweeping stimulus bill. A vote in the House is expected tomorrow. Press Secretary Jen Psaki says that'll mean direct payments of $1,400 should be going out this month. And she says President Biden's name will not be on that check.
This is not about him. This is about the American people getting relief.
President Trump's name did appear on stimulus checks that went out during his tenure. Jury selection is moving forward in ex-cop Derek Chauvin's trial. The former Minneapolis police officer is accused of killing George Floyd and is facing charges of manslaughter and second-degree murder. He was caught on camera last year kneeling on the unarmed black man's neck for nearly 9 minutes. Judge Peter Cahill has been asking jurors if they can hold judgment until they hear all the evidence.
Just about everyone has seen or read something. The question becomes, can you put all that aside? Because as a juror, you have to decide the case just on the evidence you hear in the courtroom. Do you think you could do that?
I don't know. The judge has set aside 3 weeks for the jury selection process that could last even longer. Queen Elizabeth expressed concern today over allegations of racism in the royal family that were raised in the Oprah Winfrey interview with Prince Harry and Meghan Markle this week. But in a statement, Buckingham Palace says the issues will be addressed privately. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now let's check in with Charlie Pellet for a business flash.
Thank you very much. And we have got 13 minutes to go ahead of the closing bell. U.S. stocks off as session highs, but it is an up day for the Dow, the S&P, and NASDAQ. Chevron today revived aspirations to pump 1 million barrels a day in the Permian Basin after drastic budget and job cuts trimmed operating costs. Mike Wirth is the CEO of Chevron, and you heard him live here on Bloomberg Radio and Television moments ago. He talked about a number of topics relating to the oil giant, including the company's dividend.
We've actually grown our dividend payout for 33 consecutive years. We haven't cut our dividend since the Great Depression. We saw a number of our competitors cut dividends last year. We haven't done it for nearly 100 years.
Chevron shares, they are trading lower today as the market rallies. We've got Chevron down now by 0.5%. West Texas Intermediate crude oil down 1.8%, $63.85 a barrel. Gold is up 1.9%, $17.15 the ounce. 10-year yield 1.53%. Investors pouring back into the market's riskiest assets. Dip buyers powering the NASDAQ 100 to its biggest rally since November. NASDAQ 100 index off session highs up now by 4.2%. S&P up 63, up 1.6%. The Dow up 102, up 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 11 minutes left in today's trading session. It is time for the drive to the close. Back with us is Anton Schutz. He's President and Chief Investment Officer at Menden Capital Advisors. Back with us on the phone from Florida. Anton, nice to have you here. How's it going?
Well, it's been a lot more fun this year than it was early last year.
Oh my gosh, that is so true. Well, all right, so let's start kind of big picture. We've certainly seen the Treasury curve move. We've seen certainly a different market environment. How do you see it, especially for the financials that you cover?
Well, thank you for all the stimulus checks, because really it's kept the economy going. It's kept credit quality strong. And as people anticipate inflation, you've got a yield curve now. And, banks trade with the yield curve, even though this yield curve isn't the biggest, most important thing for them, it's still helpful because they've got reinvestment. And obviously buying treasuries at 60 basis points doesn't really make anybody any money.
So where are you seeing opportunity when it comes to banks?
So, first of all, banks have got to get their costs in order. You saw a merger this morning with SoFi. They bought a small bank. Fintech and banks are colliding. So banks have got to cut costs. They need to invest in fintechs. They need to partner. And so mergers will be very high among banks, and you'll see more fintechs buying bank charters, and you'll see more banks investing, billions of dollars in financial technology to improve the way they reach their customers.
Well,
If
it's
you
interesting.
really think about it.
Well, it's interesting too that you. No, forgive me. I was just thinking about what you were talking about because J.P. Morgan Chase too came out today, and they are pulling the plug on their Chase Pay digital wallet, just about a year after discontinuing the standalone app. So it's interesting. I feel like the big banks kind of tiptoeing into new tech, but also they're really pretty cautious. It feels like. I mean, is there a bigger trade or a bigger move that you see coming?
Well, I like investing in banks that have not only a banking product, but also have the chance to benefit from this change in technology. So like a Live Oak Bank, which has a fund that invests in fintech, has 5 direct investments in fintech, like a Finxact, which is a new core challenger. You've really got the best of a bunch of worlds, right? You've got a yield curve, you've got lots of growth from Triple P, and you've got some great new initiatives from the Small Business Administration. So, you've really got a lot of things going in a positive perspective.
So when it comes into consolidation within these small regional banks, do you see it happening between these small regional banks, or do you see more of these sort of SoFi deals, these large fintech companies, whether or not they're publicly traded or privately held, buying them up?
I think you're going to see both. If you think about costs, banks have to drive costs down. The one thing that the crisis did do is accelerated the adoption of financial technology by businesses and consumers, and probably accelerated it by like 5 years. If you think about it, so many people never used technology to access the bank, but during the midst of the crisis, they had no choice. I mean, if you wanted to transact, you had to use technology. And so everybody's responding to that, and the key is to get the cost down to deliver the product to the consumer, to deliver the product to your business, to be up with the latest technology. And, you've also got a regulatory environment that's going to shift with a new administration. So, getting some of these mergers announced earlier in the year will be more successful than anything later in the year, particularly the biggest. If you see big deals later in the year, they may have a hard time on some of the new regulators getting approved. Smaller transactions are going to have a chance to get approved throughout. But it definitely gets a little dicier. And all the transactions that have been announced so far have been well received by the market. You saw M&T by Peoples. That transaction was very well received. The CIT transaction, which was done right in the middle of the crisis, I mean, that stock has literally more than doubled since that deal was announced. So the market likes that transaction a lot. And I continue to see a lot of growth in the states that have been very tax friendly. Texas has had tremendous growth. Florida, Tennessee, had tremendous growth, and companies within those markets are going to merge with each other and get bigger and stronger.
Anton, do you see real regulatory risks coming out of the Biden administration for the financial services sector?
Well, particularly on the consumer finance side, the CFPB is going to have some real teeth to it, and I expect them to be pretty active on consumer finance. But I think it's a very different atmosphere from a regulatory perspective. But that's where some of the biggest abuses have taken place, and they want to try to protect the consumer. That's where they're going to find it. But very, very large transactions are going to have a real challenge, particularly as more and more of the regulators get replaced. Quarles' term at the Fed ends in November, I believe.
Go back to, though, I'm just looking at a couple of names that you mentioned, and I just want to make sure our audience heard it. Live Oak Bank shares, ticker's LOB. I mean, on a tear last year, up about 150%, and it's continuing to move higher this year. I think it's up another 19%. Triumph Bancorp was up about 28% last year, and it's, I think, up about 63% this year. What's the story specifically? Is it just a better yield curve, or is it, again, that fintech play? What is it specifically? Because that's pretty tremendous. And I know they're coming off of, being maybe beaten down a little bit, but still, that's a big run.
Yeah, well, I mentioned what Live Oak's drivers were earlier, and clearly being a major national SBA lender, they're the largest small business administration lender in the country.
Right.
And there's some great new programs out there, and obviously the financial technology exposure is tremendous as well. On Triumph, they actually have a payment app specifically for the trucking industry that could translate potentially into shipping and many other things. and people recognize the value of that app and how powerful it's been in capturing market share. So that one's been driven by it. And then particularly in New York, you've got a Signature Bank, which has got really strong exposure. So does Silvergate to some of the new digital currencies. And they are getting tremendous deposits, tremendous market share, and things like stable coins are going to be really important. Sure, you've got Bitcoin and the other ones that are important, but volume just continues to increase in those.
Yeah, good stuff. Anton, thank you so much. Really appreciate it. Anton Schutz, he's President and Chief Investment Officer at Menden Capital Advisors. Love talking names with him. Joining us once again on the phone from Florida. Right? Kind of interesting, some of those smaller bank plays or regional bank plays.
Yeah, and the focus that he has on areas like Florida, Tennessee, Texas, where people are moving.
Yeah, exactly. All right, stick around. We've got the closing bell coming your way in just a moment.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks finish off session highs. An update. Tech shares outperforming. Folks from Sendus, by the way, ringing that closing bell. Investors were pouring back into the markets. Riskiest assets today. Dip buyers powering the NASDAQ 100 to its biggest rally since April. Bitcoin back toward a record. Today, the S&P up 54, a gain of 1.4%. The Dow up 29, up by less than 0.1%. The Dow finishing well off session highs. NASDAQ up 464 points today. That was a gain of 4.7%. The NASDAQ 100 index up today by 4%. The Russell 2000 up 1.9%. Tesla closing up 20%, biggest gain for Tesla since February of 2020. Tesla again surging, worth repeating, up today by almost 20%. Investors were pouring back into the market's riskiest assets today. Golden Pacific Bancorp, one of today's stock standouts, surging today by almost 50%. Social Finance has agreed to acquire California lender Golden Pacific, with the financial tech firm calling the takeover a key step in its efforts to obtain a national bank charter. Andrew Schutz is president of Menden Capital Advisors. He was our guest moments ago right here on Bloomberg Business Week.
Fintech and banks are colliding. So banks have got to cut costs. They need to invest in fintechs. They need to partner. And so mergers will be very high among banks, and you'll see more fintechs buying bank charters, and you'll see more banks investing, billions of dollars in financial technology to improve the way they reach their customers.
The ARK Innovation ETF spiked 10% today, best gain on record for the ARK Innovation ETF. After earnings today, we saw Stitch Fix plunge 28%, Dick's Sporting Goods down 6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Wild thing, think you move me.
I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking, not stirring.
On Bloomberg Radio.
All right, folks, so wrapping up that Tuesday trade, Charlie Pellet giving you those closing numbers. As we mentioned, though, definitely off our highs of the day, but nonetheless a rally underway in a very different trade. S&P 500, though, despite you look just quickly at the numbers and you think, okay, everything's fine. But if you drill down into the S&P 500, kind of an even split. 254 names in the S&P 500 actually gained ground today, Tim. 250 lost ground, so almost right down the middle, one unchanged.
Similar story playing out in the industry groups right now. Energy, the worst performer, down 1.9%. Financials down 0.8%. Industrials down 0.4%. And interestingly enough, it's not tech that led the pack in the S&P 500. Consumer discretionary higher by 3.8%, but tech right up there along with them, 3.4% higher. Utilities, 1.3% higher.
Well, speaking of a company that could be a tech company, a car company, a battery company, so much more, we're talking about Tesla. It's your number one gainer in the S&P 500, up almost 20%. Investors rushing back into the name, putting a screeching halt to a 5-day slump, pushing the stock to its biggest gain in more than a year. And we do know our Emily Chang caught up with Kathy Wood again, and once again reiterating what she told us about a week or week and a half ago, that, on those dips she was buying into Tesla, but still, certainly a name that she supports.
Yeah, I think we heard from Charlie Pellet too, the ARK Innovation ETF spiking 10% higher. Tesla among the big holdings of the ARK Innovation ETF.
Yeah, that really bouncing back as well. Hey, let's bring in Bloomberg News markets reporter Abigail Doolittle. So, yeah, a strong day, but I love how you drill down, Abigail, into the major industry groups in the S&P. You look at a little bit deeper and you realize it wasn't an all-in day.
Yes, and a bit of a wild week so far with just 2 days.
It's only Tuesday.
Yeah, it's only Tuesday, but here we have some of the big tech indexes heading to their best or having their best day since April or even March of last year. One, the best since 2009. That's a China-related tech index. After yesterday, the worst day in some time. So wild swings. And to your point, Carol, it's really interesting how you dug down into the even break of winners and losers on a number basis for the S&P 500. And the reason you have the S&P 500 closing up 1.4%, yes, off of its highs, but still a decent rally with half the stocks down, is because discretionary and tech, that's about 40% of the weighting to the S&P 500.
Smart.
So as Tim was mentioning, up 3.8%, up 3.4%, really outweighing the weakness that we saw in energy, financials, industrials, and staples. And the rotation, this reflation rotation this year, taking a pause today.
Abigail, why did we see the stay-at-home winners surging today? Peloton higher, DocuSign higher. Why?
Etsy higher.
Yeah, I thought we were vaccinating at a very quick pace, and we were on our way to reopen.
Yeah, like, I'm done with Zoom. I'm done with my Peloton. No, not really. I'm not.
Well, I think a little bit of it in terms of you and Charlie Pellet mentioning Kathy Wood's buying the dip, this dip buying. You know, some of these stocks down so much recently that the dip just too tempting. Those dip buyers wanted back in on these big momentum stocks. So that I think is one factor, but probably the bigger factor, yields, if we bring bonds into it. Of course, this year we're looking at one of those relationships that when yields go up, tech stocks, momentum stocks go down because it brings into question of valuation. And when yields go up, financials and energy go up. Well, today yields are down, pretty solid rally for bonds because, of course, price trades inverse to yield. So that is why you have the financials down, energy down, and those big tech stocks and momentum stocks. And Tesla, my gosh, it's unbelievable, up 20% the day.
And I can't remember. Help me out here, because I know I think Tesla is ARK's biggest bet. And I know when she talked to Tim and I about a week and a half ago, she definitely was buying when we saw that, deep sell-off, definitely buying on the dip. I don't know when she talked to Emily Chang, was she buying again? I can't remember.
I don't know either, but I have to say, not for the faint of heart and very brave. That's definitely what a professional does, to be able to, in the face of the fear created by a 40% down move in Tesla over the last month, be buying those dips so that she is then there positioned for the 20% up move. It's really interesting. If we connect this to the Asian session, as you know, the China stocks were down sharply, that Shanghai composite touching down to its 200-day moving average. Tesla has done something pretty similar. Apple has done something pretty similar. So it's going to be interesting to see whether or not the 200-day test for a lot of these stock indexes and individual big movers, if that's enough or if there's more downside ahead.
And I will say that Wood said she has been buying the dips in some of her ETF's top holdings amid the market's rotation out of tech shares specifically. And we can check, at the end of the day, we can get an idea of, where she's been buying, where she's been selling.
Yeah, she publishes them on the ARK website. Hey, Abigail, a wild day yesterday, a wild day today. What should we be keeping an eye on? Very briefly.
I think it really right now it comes down to yields. If yields go up, you're going to see tech go down. You'll see banks go up. And if yields go down for another day, you'll probably see another solid day for technology, momentum, the mega caps, and maybe not such a great day for banks and energy.
Yeah, that close correlation. Hey, listen, good stuff. Abigail, thank you so much. You are listening to Bloomberg Radio.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson. What's your stock of the day?
Graybug Vision. That's it, Tim. It's a developer of treatments for eye diseases. The company has 3 products in the works. 2 of them treat the same condition as Regeneron Pharmaceuticals' biggest seller, the drug Eylea. Now, Graybug was spun out of Johns Hopkins University's Wilmer Eye Institute in 2011 and went public last September. The ticker is gray. The color, the first 4 letters of the name. Graybug sold shares at $15 each in its initial public offering. The stock fell in the first week of trading and then more than tripled through late November. Make that $16, by the way, in the IPO. Graybug has since retreated in a big way. In the past month, the shares have fallen on all but one day. And today, they plunged on disappointing study results. Now, Graybug released preliminary data on a would-be rival to Eylea. Afterward, the stock received its first ever analyst rating cut as Piper Sandler moved to the equivalent of hold from buy. Piper also slashed its 12-month share price estimate by 63% to $10.
My God.
And Graybug fell to a record low of $7 in today's trade. So that's down more than half from the IPO price. The stock closed at $7.20, and that works out to a loss of 51%, by far the biggest ever for that stock.
Just in one day. Ouch, to say the least. All right, Dave, thank you so much. You, Tim Stanovic, have a good evening.
I'll see you tomorrow.
See you mañana. All right, let's get a check on world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey there, Carol. House leadership is promising that the revised COVID relief plan approved by the Senate last week will be sent to the White House tomorrow. Congressman Steny Hoyer of Maryland says it's as good as done.
Once this bill is passed, as it will be tomorrow and sent to the president, we will send it to President Biden to be signed into law so that the administration can get these resources out to communities to help businesses reopen safely.
And as for those $1,400 checks, White House Press Secretary Jen Psaki says those should go out very quickly after the bill is signed.
The first batch of payments will go to all taxpayers who provided direct deposit in their 2019 or 2020 returns, followed by taxpayers who didn't provide that information but for whom the IRS has payment information from other programs.
And she says President Biden's name will not be on these checks. 2 Senate Republicans from out west are trying to delay the confirmation of President Biden's Interior Secretary. Bloomberg's Nathan Hager reports.
Steve Daines of Montana and Wyoming's Cynthia Lummis have put holds on Deb Haaland's nomination, citing her longstanding opposition to oil and gas development. The move forces Senate debate and a procedural vote, but it's not likely to stop Haaland's eventual confirmation. As a member of Congress, Haaland was an original co-sponsor of the Green New Deal, but at her confirmation hearing last month, she said fossil fuels will play a major role in the U.S. for years to come. If confirmed, Haaland would be the first American Indian member of any president's cabinet. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, really appreciate that update. You're listening to Bloomberg Business Week. Charlie Pellet joining me right now. And Charlie, this story is among the most read on the Bloomberg in the past 8 hours. And with a headline like this, you can understand why our team of reporters put the story out, but also understand why everybody's reading it. New data exposes precisely how white and male some U.S. companies really are.
Indeed. And also, too, one of the major thrusts of this story, at least in the first couple of paragraphs, is just how difficult it is to get this information. And that's one of the things that Bloomberg has done. We've obtained detailed breakdowns of employee counts by race and gender across job categories for 37 out of 100 of the nation's biggest corporations. Now, you had a very interesting guest on the radio yesterday as part of our International Women's Day coverage, Deirdre Packnod, of the CEO, co-founder of Workboard. She was talking about corporate boards, which is one place to start, at least in terms of what these boards look like and the public image that they present. And here's what she had to say about how difficult it is to make quick changes in corporate America.
There's not that many board seats. They don't come up empty every year, right? Like some people sit in the same board seat for quite a long time, and there's goodness in that. So it's not that the number of chairs up at any one time is so huge that we should just measure how full they are, right?
Yeah, and that to her point, one place to start, Carol Massar, is probably with corporate boards.
Yeah, absolutely. Starts from the top, right, and sets the tone for the rest of the company. But listen, this data that Bloomberg pulled together shows that in the upper ranks especially, companies are struggling to add more Black and Hispanic workers. Only 4 of the 37 companies had Black people in 10% or more of executive and management roles, even though Black people make up about 13% of the U.S. population. Hispanic representation also trailing national figures at many companies. I mean, the numbers don't lie.
Exactly. Only one company, according to our story, exceeded the U.S. population in its percentage of Black and Hispanic female executives and managers, and that was McDonald's.
What's great, Charlie, is more companies and some of those bigger companies opening themselves up to scrutiny and sharing data. That's a good thing. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. BioNTech CEO says the company could have the capacity to make 3 billion doses of COVID-19 vaccine with American partner Pfizer next year, making their pioneering shot far more widely available around the world. Today we saw Germany's BioNTech up by 6.9%. What a day for tech shares. Investors rushing back into Tesla, for example, today, putting a screeching halt to a 5-day slump for Tesla, pushing the stock to its biggest gain in more than a year, up 19.6%. Speaking of Tesla, speaking of tech, Cathie Wood's primary ETF joined the broader tech rally, delivering a reprieve from a month of selling. Her $20.2 billion ARK Innovation ETF, ARKK on the ticker there, joining a spectacular rebound and beating down tech shares, rising 10% for its biggest advance since it started in 2014. S&P up today by 54, up 1.4%. The Dow, little changed, up by just about 0.1%, up 30 points. NASDAQ up 464, up 3.7%. NASDAQ 100 index up by 4%. 10-year yield 1.53%. Gold up 2%, $17.17 the ounce. And West Texas Intermediate crude down 1.9%, $63.79 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Bloomberg Interactive Brokers studio. And we talked about this story yesterday. In fact, Charlie just talked about Tesla again, and I talked about this with Tim, having a banner day, your number one gainer in the S&P 500, biggest gain, as Charlie mentioned, in over a year. But this story, which we mentioned yesterday, we knew we wanted to do more with the reporter who wrote it. This story, a Bloomberg exclusive, it's about Tesla's secret mega battery plugging into the Texas grid. Texas Power story has been a big one as of late. Let's get into it with Bloomberg technology reporter Dana Hull. She is on the phone in San Francisco. Dana, I'm glad you're here because I think it's a really important story in kind of understanding Elon Musk and kind of the bigger story that is Tesla. But let's get into the details. Tell us a little bit more about what Elon Musk and Tesla specifically did in the Texas power market.
Sure. So for over a year now, Tesla has been building this massive battery park in Angleton, Texas, which is about 40 miles south of Houston. And they're going to be providing they're going to be providing electricity and ancillary services to the ERCOT grid. ERCOT, as you all know, is the Texas grid that basically collapsed or nearly collapsed last month during the big freeze. And so it's just a sign that the energy part of Tesla's business is a growing one. It's not one that people think about when they think about Tesla. The company is really known for its electric cars, but they do have an energy division that is expected to be a big part of their growth trajectory going forward.
Did this come as a surprise? How did we not know this? I mean, obviously you knew it, but how did this come to be?
It's a surprise or a secret in that it had not been announced. Typically, utilities and battery developers will do a joint announcement. There'll be a ribbon cutting. They'll have a little press event for the TV cameras. When the thing is operational. I just kind of put the pieces together and was able to find out about it ahead of time. And frankly, the digging required was not, it was a challenge, but it's not like I had to file a bunch of Public Records Act requests. If you, spend a lot of time on the internet, as I do, and know how to search property records, you can kind of piece it together. And what's interesting is that, Tesla had registered this project through a subsidiary called Gambit Energy Storage LLC. So it was just a matter of kind of tracing the paper trail and double fact checking everything in terms of the projects lining up with Tesla.
Did I understand that, though, in order to kind of get a visual on it, you guys had to set a drone out?
Yes, we hired a fantastic photographer in Houston, Mark Felix, who is a licensed drone pilot, and he drove out to the site, tried to talk to some workers there, flew a drone overhead, and, it's fantastic because you really can't see the project super well from the street.
Well, it's interesting. We're actually, for those who are watching our show right now on YouTube, they can actually see some of those images, which is so fascinating to kind of get the visual on it. You know what's fascinating about this, Dana, and you know this so well. I mean, Elon Musk has mocked publicly ERCOT. I feel like he's been really critical of what's been going on in Texas.
Yes, and what's interesting is that I knew that Tesla had a project with ERCOT like in January, and I was trying to figure out where it was. And then on February 17th, Musk tweeted at ERCOT, said, "You're not earning the R in reliability." And I was like, wait a minute, like, don't you have a project with those guys? So the fact that he sort of was tweaking ERCOT publicly, it was a little bit of a tell that, like, he knows what ERCOT is and what they do. Obviously, Musk lives in Texas himself, so I'm sure he and his family were being impacted by the storm. Maybe he lost electricity himself, but that actually kind of inspired me to get off my butt and do more digging into this project, because I was like, something is going on here. Like, it sort of set off my spider sense.
Well, listen, I feel like he's got a love affair with Texas. I've got lots of lovely family who I adore in Texas. I can understand why you love the state. But I mean, you even pointed this out because I noticed it. I follow his Twitter feed, and I'm like, he put out a picture of his, I guess, youngest child and Starbase Texas. I mean, he seems like he's all in on Texas all of a sudden.
Yes. I mean, he basically said that he moved to Texas because the two big projects for both of his companies are now happening there.
Okay.
SpaceX is building this brand new rocket in Boca Chica. Tesla is building this brand new factory for the Cybertruck in Austin. The state has no personal income tax. I mean, yes, the center of his gravity has basically moved to Texas. But to be clear, Musk has been going back and forth between California and Texas for quite some time, and it's not unusual that he's there quite a bit.
Coming soon, The Boring Company, a tunnel between Austin and California. Hey, listen, the other thing I love about your story, it's a reminder that when we talk about Tesla, we think of the cars, got it, but it really, at its core, in many ways, is a battery company that holds a lot of potential, possibly, for this company.
Yeah, and, there's a lot of money to be made selling ancillary services to the grid. And I think that the bigger piece also is that, Tesla used to be called Tesla Motors, and then they dropped the motors from their name, and they just became Tesla. And their mission is now, to accelerate the advent of clean energy. And I think part of it is that, you always hear this rap, oh, electric cars aren't really that clean. You've got an electric car, but you're driving on coal. Well, that's really shifting as our grid gets cleaner. And in order for our grid to get cleaner, you need a lot of batteries on the grid to store the electricity that's produced from wind and solar. And Tesla very much is a player in that game. I mean, I sort of knew about their energy storage work because they have projects here in California. I mean, they have a project even bigger than the one in Texas coming on deck with PG&E in August.
Man, I feel like he's like everywhere. It's just wild. Hey, great stuff, as always. A Bloomberg exclusive, Dana Hull giving us the lowdown on Tesla plugging a secret mega battery into that Texas grid. And you can find out more of her stories. Just check them out on Twitter at Dana Hull and also at Bloomberg.com. Coming up, we've got a neat guest. We're going to continue with the tech world. We're going to check in with Tom Siebel, founder, chairman, and CEO at C3 AI. That's coming up.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, coming up, we're going to check in once again with Tom Siebel. He's founder and CEO of C3AI. Talk about the growth in artificial intelligence, where it will be in demand and used most when it comes to the industries that are out there. So we'll check in with him in just a second. Let's get back to your top business stories. Here is Charlie Pellet.
Hi, thank you very much. Let's begin with Tesla shares up today by 19.6%. Yes, it's a story we've been reporting on, but what a move today for that stock. Tesla rallying 19.6%, putting a screeching halt to that 5-day slump, pushing the stock to its biggest gain in more than a year. Worth repeating, Tesla shares up today by 19.64%. All a part of a broader tech rally, investors jumping back into the market's riskiest assets, dip buyers powering the NASDAQ 100 to its biggest rally since November. And this headline from the Bloomberg Professional Service: hackers exposing Tesla and jails in a breach of 150,000 security cams. Developing story there. That news breaking right now. Headline on the Bloomberg Professional Service: hackers exposing Tesla and jails in a breach of 150,000 security cams. It was an update on Wall Street today, as I mentioned, with the S&P advancing 54 points, up 1.4%. The Dow up 30 points, up 0.1%. NASDAQ up 464 points, up by 3.7%. NASDAQ 100 index up 4%, 10-year yield 1.52%, gold up 2%, 17.17 the ounce. West Texas Intermediate crude down 1.7%, 63.95 a barrel. Well, as for the overall market backdrop, David Pearl is Chief Investment Officer at Epic Investment Partners.
We're about to have a $2 trillion stimulus, so the propensity of consumers to spend is very high. Now, personal savings actually went up during this period. Obviously, if you have a job, there weren't things to spend on. So we're going to see spending by consumers, which is 70% of GDP, really rocket up. And it's going to be in areas like restaurants, travel, entertainment, in particular, are going to have the biggest rebounds. Now,
Roger Mudd, who covered politics and government from Washington for CBS and then NBC during a 45-year TV career, has died. Roger Mudd, dead at the age of 93. Recapping S&P up 1.4%, I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. So our next guest, we caught up with him last in May. A lot really has happened since then. Great to have back with us Tom Siebel, founder, chairman, CEO at C3AI. Ticker of the company is AI, founder of Siebel Systems, which was sold to Oracle back in 2006. Tom, also author of the book Digital Transformation, Survive and Thrive in an Era of Mass Extinction. He joins us on the phone from California. Hey, Tom, good to have you back with us. How are you?
Hi, Carol. I'm great. Nice to hear from you.
Well, it's nice to have you here and hear your voice. I got to ask you, I want to get into a lot of things about what your company's doing, talk to you about AI, but I got to ask you about this headline that just crossed about hackers saying that they exposed Tesla and some jails in a breach of 150,000 security cameras. They said they wanted to show prevalence of surveillance. We are definitely living in different times.
Well, I think the threat associated with cyber threat, from bad actors and nation states, including Russia, China, North Korea, Iran, is existential. I mean, these people have the ability to shut down the United States power grid infrastructure, the financial system, the healthcare system, with a cell phone from the other side of the planet, and they can do it tomorrow. This has been very, very well documented in books that have been recently published, such as The Perfect Weapon, and This Is How They Tell Me the World Ends. And this is very, very serious stuff. That last week, the National Security Commission for Artificial Intelligence published its report 4 years in the making, then concludes that today the United States government is not organized or investing to win the technology competition against a committed competitor nor is it prepared to defend against AI-enabled threats and rapidly adopt AI applications for national security purposes. We are exposed. There are bad actors out there, and this is very scary.
Well, it just reminds me of, it's like, I've seen this movie before. We saw it in the form of the health pandemic. Lots of warnings for years, and yet we weren't prepared. And I feel like we're setting up for something like that again. And I have to say, I'm reading this story, and they say they breached massive trove of security camera data collected by a Silicon Valley startup, Verkada. They gained access to live feeds of 150,000 security cameras inside hospitals, companies, police departments, prisons, and schools, able to view video from inside women's health clinics, psychiatric hospitals, and the offices of this company, Verkada itself. And they were using, in some cases, some of these cameras, including in hospitals, were using facial recognition technology to identify and categorize people captured on the footage. I think about this. You are so in on the AI world. You talk about us not being prepared for, listen, there's great things to be had by it, but there's also a downside. We're not ready for it or not prepared for it.
When you get into cybersecurity and InfoSec, this is just very scary stuff. I mean, the Chinese went into the Office of Personnel Management in Washington, D.C., and walked off with like 20 million records of everybody who's ever been considered for a security clearance. I mean, the Russians were in there within the last month, and nobody's been telling the story of how thoroughly they penetrated the United States government. I mean, the emperor has no clothes. This is not on the national agenda, and this is existential. If these people are to turn off the U.S. power grid, which they could do in a second,
right,
9 out of 10 people in the United States die. So this makes the whole COVID pandemic look like a common cold, compared to, this is very, very serious stuff. This is existential stuff, and it's not on the national agenda.
Yeah, it says another video shot inside the Tesla warehouse in Shanghai shows workers on an assembly line. Hackers said they obtained access to 222 cameras in Tesla factories and warehouses. Well, this is your world. You're having conversations with people who are tapping into and working with you guys. You provide, enterprise AI software. Is anybody kind of aware of how to do this in a responsible way? I mean, this is your world. We've just got about 30 seconds, Tom, and then we'll come back and talk some more.
Yeah, I would say the organizations that are most equipped, and have the greatest levels of security as it relates to AI and cybersecurity are the banks. These guys have security regimens where their information systems are completely air-gapped. They're tested. They have security protocols that are incredibly rigorous, whether they're dealing with the U.S. banks or the European banks. These people have done a superlative job, and the people in the United States government could go to school on that. They look like, candidly, they look like Cub Scouts compared to the way the banks handle information security.
Hey, Tom, sit tight for a second. We'll come back in just a moment. Got to do a little bit of news. We're going to come back with Tom Siebel. Let's get an update on world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. House Democrats are preparing to vote on President Biden's coronavirus relief bill tomorrow. Democratic Caucus Chair Hakeem Jeffries says it's just what the country needs.
The American Rescue Plan is transformative. It will comprehensively and compassionately meet the moment as a result of the devastating COVID-19 pandemic.
House Republican Whip Steve Scalise says the bill is more about Democrats pushing a progressive agenda.
90% of the bill that they're going to bring back on this $1.9 trillion spending bill is not focused on COVID relief. It's focused on pushing more of the far left agenda.
Well, there is some promising news from Pfizer about how its vaccine fares against the coronavirus variants. Bloomberg's Amy Morris reports.
While vaccine developers are working on new versions to fight the mutant strains, the two-shot Pfizer dose showed a strong ability to neutralize coronavirus strains found in Brazil, the UK, and South Africa. But those tests were done in a lab where the shots showed robust but lower effectiveness against the South African variant and roughly equivalent strength against the variants found in the UK in Brazil. The study focused on people who had their final vaccination 2 or 4 weeks before. In Washington, I'm Amy Morris, Bloomberg Radio.
Jury selection is underway in the trial of Derek Chauvin, accused of killing George Floyd by holding his knee on Floyd's neck. The jury selection process could take a couple of weeks. Chauvin is charged with second-degree murder and second-degree manslaughter. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy Lyons, thank you so much. I got to say, I am mesmerized by this story. Charlie Pellet, come on in on this. I'm reading this story. I think you saw the headlines. I saw the headlines. I got a few tweets out on them. But a group of hackers saying they breached a massive trove of security camera data collected by Silicon Valley startup Verkada, gaining access to live feeds of 150,000 security cameras that were inside hospitals, companies, police departments, prisons, and schools, and it goes on and on.
Indeed, it does. It's a Bloomberg exclusive written by R. William Turton, and I was shocked as I was reading. I saw those headlines the same time that our listeners heard them. It was what we call a red sticky here at Bloomberg that cleared on the terminal, and it's just absolutely shocking how these guys can get access to so many things. In the meantime, here I am just trying to check a frequent flyer account or a coffee shop account, and I've got to answer questions about how many motorcycles or how many traffic lights are in this image, and I don't want to click on the motorcycles because it's really a moped and not a motorcycle, and trying to figure out if my password begins with a 1 or a 2, and then I got to reset it because I've used, I can't use any of my previous 20 passwords. In the meantime, I could be spending my time looking at 150,000 surveillance cameras around the world.
Well, this is crazy, and apparently William Turton, unbelievable reporting. As you said, a Bloomberg exclusive. Data breach carried out by an international hacker collective and intended to show the pervasiveness of video surveillance and the ease with which systems could be broken into, said one of the hackers who claimed credit for breaching that San Mateo, California-based Verkada. And it's just, listen, we are increasingly a digital world, and you just know it's probably a matter of time before it can be tapped into.
And indeed, and I just want to point out, too, that this is not a story that has been written by citing sources. Yeah. We have seen those videos here at Bloomberg News, and including shots inside a Tesla warehouse in Shanghai. So an absolutely staggering breach.
Yeah, exactly. And we'll continue to follow that story. I'm going to get back to Tom Siebel, talk a little bit more about his work at his company, C3 AI.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. An update on Wall Street with investors pouring back into the market's riskiest assets. Dip buyers powering the NASDAQ 100 to its biggest rally since November. Bitcoin heading back to a record. One of today's stock standouts was Tesla, rallying 19.64%. Cathie Wood's ARK Innovation ETF spiked 10% in its best gain on record. The NASDAQ 100 index up today by 4%. NASDAQ Composite Index up 3.7%. The S&P up 54 points, up 1.4%. Should point out that today NASDAQ surged 464 points. The Dow ended well off session highs, up 30, a gain of 0.1%. 10-year yield 1.52%. Gold up 1.9%, $17.15 the ounce. A down day for West Texas Intermediate crude, lower by 1.9%, $63.81 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to Tom Siebel, founder, chairman, and CEO at C3AI, founder of Siebel Systems, of course, also author of the book Digital Transformation. He's still with us on the phone in California, and you've been kind enough to indulge us as we were breaking down these headlines on this major hack. You know, listen, Tom, you've been in the technology world for a long time. You've seen it evolve. It's gotten much more sophisticated. It's got a lot more invasive. It's gotten a lot more useful, and it's such a part of everything that we do. AI specifically, talk to us about kind of what's front and center right now in terms of where it's going, who's using it, where it's going to be the most productive.
Well, leading corporations around the world are using AI in smart analytics, precision medicine, aerospace, manufacturing, telecommunications, banking, and they're using AI to deliver better products and services, to deliver safer, cleaner, more reliable energy. They're using AI to secure data assets from cybersecurity attacks. They're using AI in defense and intelligence. This is the largest. We look at enterprise AI software. This is a third of $1 trillion market in, say, 2024. So this is the largest growing enterprise application software market in history. Okay, and we serve all segments of that industry, from banking to telco to healthcare to government.
Listen, so give me AI for dummies, because I feel like we throw around, certainly not you, but we throw around the term artificial intelligence a lot, and I think people have a grasp of it, but I don't think they understand, especially as you go through that list of basically our world, to be quite fair, whether it's military, whether it's medical, whether it's energy, where the use of AI is making things so much better. What is the AI for dummies, if you had to explain it to somebody?
Great question. Okay, so AI, and so when you strip away all the mystique and all the noise, AI is an area that we call predictive analytics, where we're able, due to kind of advances in information technology, to solve problems that never been able to solve before, where we can predict things before they happen very accurately. Heart failure, okay, diabetes, okay, a failure of a transformer in New York City, okay, the failure of a jet engine. So we can predict these events, or the failure of a critical piece of equipment on an offshore oil rig, say for Royal Dutch Shell, where we can predict these events, say days or months in advance, and replace the transformer in New York City and prevent the electricity outage. Okay, intervene clinically and prevent the heart failure. Okay, do some intervention on the machine and prevent the aircraft failure before it fails. In a nutshell, that's what enterprise AI is all about: is predictive analytics, and that is accurately predicting events before they happen. And we're able to do that today with very high levels of precision.
Well, and when it comes to something like healthcare, listen, we have all been obsessed with our healthcare because our lives depended on it in the last year. And understanding, we all got, I think, safe to say, somewhat smarter in understanding how vaccines are developed and the complications of, a virus and all these things. when it comes to healthcare specifically, you talk about AI, like we can predict heart failure. I mean, is this an area that we have yet to explore in a big way when it comes to AI?
Yes, I think this is a field where we apply AI to healthcare. This is what we call precision medicine. This will be the largest commercial application of AI. And for example, we can take the genome sequences and the healthcare records of, say, the population of the United States or any population, okay, and apply machine learning algorithms to these data and predict with very high levels of precision who is going to be diagnosed with what disease, okay, in the next 5 years, heart disease, lung cancer, whatever it might be, and then intervene clinically and avoid the diagnosis. Well, you combine that with telemedicine to reach previously underserved members of the community, and the economic and social benefit of this is staggering. Then you have genome-specific medical protocols, where we have tailored medical protocols to the individual genome, which are going to be much more highly efficacious at a much lower cost. So these are examples of AI applied to medicine. This will be, again, the largest application of AI in any field.
It's funny. I feel like you're tying up our show so well because earlier we talked with the CEO of Pacific Biosciences, who is involved in that sequencing, the genetic sequencing. So it's wonderful how you've tied it up. But okay, it sounds so promising. Help me out here, though. Then why isn't the community moving, maybe the healthcare community, moving more rapidly towards embracing it? And I'm going to be fair here. I hope you'll see it that way. Your stock's down a lot. Like, what is it that investors aren't getting about the subject if it's so promising, or about your company that's so promising?
Well, our company went public last December. We priced the stock at 42. I think it's trading at about 90 today.
That's fair.
So with all due respect, I think the company's doing quite well. But
why the pullback? Is it just kind of like giving you guys some space here, or what?
I think that, I don't pretend to understand capital markets, and, that's not my business. We're just building a company, and the stock price will take care of itself. But I think that, if we look at the leaders in healthcare, whether it's CDC, whether it's NIH, we look at Cerner, United Healthcare, these people are very, very focused on precision medicine and applying AI to the medical process to deliver, more efficacious, more readily available, lower cost medicine, and the result will be a healthier population that lives longer. And so there are many organizations focused on this in a big way, massive amounts of research taking place, and a lot of this is being led by, as it relates to COVID, by what we call the C3 AI Digital Transformation Institute, which is an effort that we did with Microsoft and MIT and Berkeley and Princeton and Carnegie Mellon and others, where we're doing very, very advanced research in applying AI to understand pandemic and course of disease and drug discovery and what have you. So there's massive amounts of research going on in this area.
Yeah, it feels like it's just such a world that just continues to open up. Hey, Tom, thank you so much. Always appreciate it. Tom Siebel is founder, chairman, and CEO at C3 AI. And to be fair, the stock did IPO at 42, and as Tom mentioned, it has more than doubled from that amount. So good to get that in there. Coming up, Sound On with Kevin Cirilli, coming your way at 5 p.m. Hey, Kevin, what's on tap?
Almost Heaven.
What?
West Virginia. Senator Shelley Moore Capito.
Nice.
Never again. You see the mic in front of you and you just want to start singing. Is that weird?
No, I'm totally with you. I sing more on air. I never sing at home.
I
do sing at home.
I think you have a beautiful voice, Carol.
Not when I'm singing, baby. Looking forward to your show. Have a good one.
Thank you.
All right. Coming your way. Sound On at 5 with Kevin Cirilli, as he said, talking to the Democratic Representative Abigail Spanberger of Virginia. All right, for the whole Bloomberg Business Week team, I'm Carol Massar. Have a good and safe evening, everyone. This is Bloomberg.
Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up this hour, NASDAQ roars back. A day after falling more than 10% from a record, it mounts a rebound. Tesla has the biggest gain in over a year. GameStop defies gravity, climbing as much as 27%. We've got you covered on a huge day for the markets. Plus, speaking of Tesla, hackers attacked Tesla security cameras and video footage of U.S. prisons. This after Chinese hackers go after Microsoft's business email software in a hack bigger than solar winds. We'll talk to a cybersecurity expert about the damage and what needs to happen next. And the race to hit the pavement. Amazon-backed EV maker Rivian says it'll roll out a pickup, an SUV, and a van all this year. A daunting production pledge and, quite literally, the need for speed. All those stories in a moment, but first, hope springs eternal for investors. The NASDAQ seeing a massive rally. Our Ed Ludlow has the very latest. Ed, a big rebound today for those who were terrified this was going to be a long-term correction.
Yeah, how quickly things change. Full risk-on mode, technology stocks really at the heart of that. The NASDAQ 100, which is that index, very tech-heavy that we talk about a lot, up more than 4.4%. Its best day since November 4th, a special day because that's my birthday, of course. The NYSE FANG Plus Index up 6.8%, and the Philadelphia Semiconductor Index up 6%. Both of those indices having their best day since April, so really a surge and a rebound in technology stocks on Tuesday. In terms of some of the specific movers on Tuesday, it's the names that have really been under pressure, the likes of Tesla, which had its best day in more than a year. You can see they're up almost 20%. Lots of catalysts behind Tesla. Wall Street analysts raising price targets, also riding the wave of cryptocurrency after that recent investment. But some breaking news after the bell that hackers have actually managed to get hold of live surveillance footage from inside Tesla's Shanghai factory. They were able to do that through a third party, which was monitoring, storing the live feeds. A Bloomberg scoop coming after the bell. There doesn't seem to be any aftermarket reaction in terms of the share price, but that's definitely one to watch going forward. And then, of course, Apple, Amazon, Microsoft, those stocks that have been under pressure as yields have been rising. If we put the NASDAQ 100 side by side with the Philadelphia Semiconductor Index, though, we raise the question of whether this is really a surprise. If you look at the action of recent days and weeks, the NASDAQ 100 was off 11% from its February 12th record. The Philadelphia Semiconductor Index off 15% from its February 16th record. When we see pullbacks, we then see buying. That's been a common theme in markets of recent moves. Come with me into my Bloomberg and also look at this chart, because basically we see that even though we've had this rebound today, tech stocks are still sensitive to bond yields. In fact, they're most sensitive to bond yields since 2016. A lot of the concern is about the stretched valuations that came as a result of that outsized earnings growth that we got in the most recent quarter. And finally, I want to touch on Cathie Wood. Wow, how things can change in such a short space of time. 24 hours ago on the show, on the back of her and ARK's worst run in a long time. Today, ARK Innovation ETF up 10%, its best one-day gain on record. Emily.
Ed, a wild day and also a big comeback in the crypto markets as well. Bitcoin now above $54,000. What's driving that, or is it just happening in parallel with broader market trends?
Yeah, Bitcoin up near records, near $54,000. Support largely coming from the risk-on sentiment in the market. But there were some notes out there as well. You know, data's doing the rounds online. You know, it's a very popular asset class with Twitter users and Reddit users alike about how a large number of insurers actually are getting into Bitcoin, you know, giving it some institutional backing. Also, technical analysis, a report out from Evercore ISI saying that they see Bitcoin headed towards $75,000 based on technical analysis. If we look to the cryptocurrency alongside Ether over the last 12 months, Ether, of course, the second biggest cryptocurrency, we've been so focused in recent weeks about being near those record levels. But if you go back even just to November, look at the run-up in both of those cryptocurrencies. You know, this is a longer-term story. There's been such a dramatic increase in the price of both over recent months that focusing day-to-day on 45,000, 54,000, there are such huge swings in the price. It's really about looking at those longer-term drivers for lots of the commentators in the market.
All right, Ed, thanks so much for that wrap. Much to continue to follow. I also want to hit on GameStop today, another winning streak there. Shares of the video game chain rising 96% over the last 5 days. Activist investor Ryan Cohen, the founder of Chewy, is continuing to shake up operations. The company says he will lead a committee focused on digital transformation. For more, I want to bring in Bloomberg's Katie Greifeld. And Katie, certainly a lot of investor optimism, but also a lot of retail interest. Would you see a move like that if it was just some normal activist investor coming in and trying to shake things up?
I really don't think you would. I mean, GameStop, it's had such a week, up 80% already, and taking markets by surprise. And, you know, we did have fundamental news behind this move, at least, in Ryan Cohen being tapped to lead the company's e-commerce revival. But as analysts have pointed out, that was expected, and it probably doesn't explain why we've had such a big rally this week. And it's probably premature, even if you do expect GameStop to successfully execute that shift. Craig Burke from Personal Capital told Bloomberg today that transformations take time. Obviously, some fail. So it's not a sure bet that GameStop will successfully pull this off. But given the enthusiasm that we've seen behind the stock, regardless of that fact, it probably points to this is really retail driving this move.
So let's talk about that. I spoke to Kathy Wood of ARK Invest yesterday, asked her about the retail investor frenzy, this shift in power we're seeing from institutions to individual investors. Take a listen to what she had to say.
The retail investor has seen the future really before institutional investors, because post-tech and telecom crash and post-08-09 meltdown, institutions have been forced to track their benchmarks more closely, or they've chosen to. We think that's longer term a losing proposition. It's very backward looking. So we have found some of our strongest holders to be retail investors, because they really are keeping their eye on the prize. They know the world is changing. They're part of making the change.
She's talking about retail investors holding in ARK's ETFs, Katie. That comment got a lot of engagement on social media, probably from some of the folks who are investing in retail investing at this very moment. You know, talk to us about what the continued push into GameStop actually means, given that they don't seem to be losing their momentum.
Yeah, and I mean, Kathy's right in that the retail investor has been a big fan of her funds, and they've really held in there. ARK has admittedly seen outflows in the past couple of weeks as some of that performance starts to bite, but really, there's really sticky inflows in there because she is so popular among this Reddit crowd. And in terms of what GameStop means for the market, and it just shows that retail traders, they're here to stay. I mean, after the mania that we saw at the end of January, a little bit into February, a lot of people in the market were happy to write that off as well, that was weird, but at least it was a one-off. But as we can see from this week and some of the action in some of the penny stocks, it's not just GameStop, I'll point it out. It really shows that the retail trader is still hanging in there. They're holding through the dips. And they were expected to be shaken out by the first time of trouble, but clearly that hasn't happened.
Well, and Kathy Wood also said in that interview she's still buying the Tesla dip, and we saw a comeback there. I mean, what's your sense of whether we are seeing the beginning of a longer-term correction, or whether the last few days and weeks are just a blip in a tech market that's going to continue to go up?
Well, with everything else, it depends on your